All right, folks, let's get to it for a Thursday. Jump right in there. How's everyone doing today? We got Mitch Ray coming in about 10 minutes. A little bit of a delayed start for me today, but that's why you hit the subscribe button. That's why you sign up, get your notifications, hit the like, all of that, and join us here every Tuesday and Thursday, 12 noon Eastern. And of course, shout out to all those folks that watch after work or at night. Always good to see you guys. Shout out to my buddy Paris, who's out there, who watches at night. What's going on, Paris? And what's going on, chat? Justin, Mr. Lodak, Grow Green. Numbers go up. Echo Leaf, Swooping Hawk, Stupid Head, Frankie, Alex, everybody. Mark, what's going on? You guys ready for Mitch? It's been a little while. Mitch and I haven't done anything in I think, a few months, so it'll be good to come back. And I will try to jump over to his, or I will jump over to his channel tonight after we get the kid to bed. So let's start with a quick brush of the macro SPY. And then we'll jump to crypto, and we'll get Mitch on the crypto. Nothing's changed, really, with SPY, except for we get a bullish bar today, folks, and we're trying to print the dot on the daily. That, well, you know what that means. Check back was down here at 406. Now we get a bar, and that makes this support at 409. Everything pretty much a floor and something maybe into the end of the quarter. We're on to 423. What's that sound like? Sound like possible? It's a high level bullish continuation where even if we're going to come in here and have some kind of bearish, larger bearish thing develop, we need to see this on a larger test up in the zone, and we need to see that next level HSI overbought trigger. And look where we are. We're breaking above the 50. So that's an important development that we want to see it into really next week. I can't believe it's already Thursday. But that's what we're doing. That's where we're at. Also QQQ. This thing's is just, on a march. And I've been talking about that. We didn't get a check back, but really since that triggered 313, the only thing is to go for a high test at 330.99, call it 331. Just so you're clear on the daily, this is what happens when you start to go from 50 to the 886. You start to accelerate, and we're accelerating against a bearish pattern in a high level zone. And we know what happens. That takes more time for the bearish to resolve itself. If anything, the hop, just target the hop, 331 on the Qs. And that lines up with last year's peak. And most people are not looking at harmonic patterns, but we do for the levels. And that's where your 886 comes in off of that. Software is generating the bat off of a slightly different X point, but just know, look, 886 is like right in here, right about where we are now. So you're hitting there. 325 is your 886, and I don't expect anything until we can register that overbought. Evan, I'll take a double cheeseburger, my friend. If you're cooking, I'm buying. I'll take it. I'll have some coffee with that. Anyway, that's what we're looking at right now. And I don't think that stops until you get some short-term signals where, again, 325 on the Qs, nothing. Talk to me at 331 or above 330. It's big stuff. Quick peek at the banks, because I know we're going to look at those. And what are the big ones? Well, look, your safer, perceived safer ones are still doing from a harmonic level, like Bank of America. It's a 2 of 2 on the butterfly, but it still needs to come down, test that zone. That's a little bit different than, say, regional banks like PacWest, which despite the earlier bounce from this week, you're right back down, checking back yet another HSI, nothing here. I mean, that's not the sign of a turnaround for any of these banks. The other one really to watch, okay, is this Western Alliance Bank. Because if that starts dropping again, we had a monster dip all the way back down to $11, bounced to 30. This thing's been all over the place. Check this out on a 5-minute. I mean, that's literally, just insane action. Insane action. So the banks aren't over yet. Banks are not there yet. One or two more. Listen, every day, and we did this on Tuesday, and every day I'm looking for 5-minute pullbacks, mostly in Meta and Microsoft. And here was Softy this morning. Perfect type 2 back at 306. And I've been saying this to the Discord group that these are going to be your 5-minute trades all summer long. Here's Meta. That's actually made a great deal of work this morning. After yesterday's type 2 on the butterfly at 231, now you're at a hop level, 237.57. No confirmation. Look, Meta looks like it wants to go higher too, because look at your hourly. Fairly strong but I have to say, kind of a disjointed market. You know, Dow's down 250, Nasdaq's up 30. We're all over the place. Hey, if you want to talk about a burger, here's a burger, Shake Shack, and this thing, real surprising. But look at the daily chart. I had a crab there. I don't know why that disappeared. Sorry, weekly chart on Shake Shack. And there's a lot of these. A lot of these that had weekly patterns. Some of these are like they're kind of lower name stock plays, swing stock plays. But Shake Shack with this alternate bat, even though it took 6 months to move, is clearly headed for 76 as the type 1 target. So you've got some individual plays, other things not so nice. Here's one other one. Here's 3M, and that's hit the 100 level. That's where we've been looking for 3M on our daily chart. There you go. So I'm just starting to assess this now. 3M wasn't what was here on a weekly? Sorry, there was something here on the weekly. Weekly or monthly? Maybe the dot. I know $100. It escapes me at the moment. All right, let me see if I can get Mitch in here. Bring Mitch in. Everybody, hold on 1 second. Let me dial Mitch. Hey, Mitch, can you hear me? Okay. Great. All right, everybody, we're going to give Mitch here in 2 more minutes. He needs 2 minutes, I understand. The man's on Miami time. So 12:30 Miami time is like 9:30 in New York time. But it's great. Let's jump to crypto. I'll do the quick top 5, and then we'll bring Mitch in here. Bitcoin, 27,100. Who's scared? Who's scared? Printing a bat pattern. It's a type 2 off of the April lows. And 27,000's it. That has been the number for a while. So we're looking. And I'm looking here for a yellow dot in the 4-hour. Also, we know daily time frame, oversold, checking back, but this should be it. And we're back in the oversold zone. So, hey, I'll have a problem with Bitcoin if we break down over the next 2 or 3 days. Right now, not so much. Let's see. Ethereum back down at 1,800. Again, we've been saying that that is the floor, and plus or minus $20, $30, whatever. I don't like the fact that I wish these confirmation signals, they would either give it up now or be above the 50 level. They're not doing that. So, you know, I don't expect much here on Ethereum except for to stabilize, hold 1,800. Got to hold 1,800 and not do much. And I said this last time we looked at this is just, you know, go into a 30-day. Hold for 30 days. That's by the 25th. Number 3, Binance Coin. 310. Just scraping the lower end, and looks like daily's going to give us an overbought trigger in a day or two. Nothing's changed on Binance Coin. 330 on the top side. 300, 310, maybe 295 static support. I'm looking for an HSI signal very soon. Another day or two. All right, let's get Mitch in here. 1 second. Hold on. Let's see what we got. Get him in here.
Hello?
Mitch, can you hear me?
Oh God, hold on. Let me see. I can see you light up, but 1 minute.
Okay. You sound good though. Everybody, how does Mitch sound? Some hype for
Hold on, I
Mitch.
still can't hear you.
Oh no.
This might be it. Let's see.
Hey, can you hear me? Check, check.
I can hear you. Can you hear me?
Yes, I can.
All right. Okay.
Welcome.
Thank you, man. It's been a minute.
It has been a minute. It's been a crazy minute, but glad to get us back together here. And let's talk about some markets. I mean, it's quite
Yeah,
a,
which ones?
yeah, depending on where you're going to be. If you're Microsoft or the big mega tech, you're holding the market up. If you're anything else,
Yeah, dude, Amazon. Oh my God, it was such a beautiful technical development. And look at the past 2 days on that one, helping drive the market. And Apple's just this almost like a zombie, the zombie march to the 886 and beyond, right? And
yeah,
it's still just up there, man. I still don't trust it. This is like, I mean, it just has such a limited amount of upside before some sort of wave down. Even if it's a slight wave down, it's a 382 pullback or something. It just seems it's almost gone nonstop since January 5th. I wish the cryptos would have done the same with their technical developments at the beginning of the year, going just a straight line up like Apple. But one is producing billions of dollars quarterly, and the others don't do literally anything. They're worse than Beanie Babies, mostly.
yeah. I got to
Oh,
think that Apple and Microsoft, after their earnings and such a strong move that that it would have to turn around. You'd have to roll over here for a couple of weeks to really develop something. I mean, this is Apple coming off that weekly type 2 bat pattern that is just exploding. And I think we got to, if it does any kind of a pullback, it would still need a one bearish weekly close, maybe 2 weeks. I don't think it's quite there yet in terms of doing a rollover, but I do hear you. I'm paying attention to the fact that Apple sitting right there at the all-time 886. That's about 175 for Apple, and maybe what Mitch was saying is something like maybe we get a 382 pullback and then it goes. But these are Microsoft and Apple are two of the biggest that here's Microsoft and that just continues to hold its head. But both of them, I mean, Apple so much closer than Microsoft, but even Microsoft as well. These are just getting to a point where structurally they want to go for the 886 retest and then maybe some kind of corrective move. I wouldn't expect a straight off breakout to all-time new highs on Microsoft, but I've been saying 335, 340 on Microsoft is likely at some point this summer or maybe by the fall, or even sooner. I just think it's, the strength off of these patterns is impressive. I haven't really triggered any overbought signals longer term just yet. So all of those, and Meta is the same deal. They all had patterns back in
Nvidia,
October. Yeah. Nvidia as well.
that's numbers. That's the what on the stock market. That's what, number six, number seven market cap in the world, $709 billion, and it has gone right since its inverse head and shoulders developed, and it's getting near a major 886 with Apple. So are they just gonna? And it's just been like a straight line up, almost no pullbacks. A little bit, but what happens when they react and we do pull back, what's that going to do to the rest of the market?
Yeah. I mean, I still think these are likely targets and, reactive targets at best. Nvidia was, I know on the daily, you had some major stuff down there. And like a lot of these, yeah, Nvidia was a bat pattern down here, under 150, ugly. Now you're,
The Emerson and shoulders, though.
yeah,
Oof.
no doubt. I mean, that really was what triggered it. Here's what Mitch is talking about is this kind of a deal where you had your left shoulder, bang, there's the head, come up, and then here's the right shoulder, and beautiful textbook. I mean, truly textbook, and shoot back up for at least this minimum pattern at where we are. I kind of like Intel. I'll show you this really cool pattern on Intel. Even
At the
though it's,
bottom still.
yeah, look at it, this weekly deep crab all the way down there. Under $30. I think it's somewhere between 28 and 30. You're at 29 currently, but that's another pattern. This pattern reminds me a lot of Amazon or Microsoft or Meta, or here's Google. And Google was one I really look at that now, 117. That's beauty. And we were talking about this all the way back at 86 in the fall, and then the daily we had couple of tests here off this deep crab. We're 93.33. I know you guys remember me saying that. 93.33. Actually, that was the radio station I worked at. 93.3 WMMR, Philadelphia. But 93.3 was, that was it. And go back to even early March, I was saying like that could be the last test. It was. We explode, and why not? I mean, something like this, even just straight off pattern perspective, that's a massive explosion through target one, where I think target two, 125.88 is easy, and you still haven't registered anything overbought definitively.
Oh my God, it's incredible. Oh, wow. Today, and you did say Intel, so I like went to the Intel chart, and I saw you started looking at Google, and I'm like, oh, Google, yeah. Yeah, man, that's okay. So I posted a trade setup 2 months ago, March 6th, on that third valley. It was like March 10th, or no, it was like March 2nd, no, March 6th. And first target from the highest high, the all-time high, to the lowest low that was put in November, 50% retrace, right? Which is just Dow's theory, 117, and here we are. Holy crap, today, gapped up. That's beautiful, man.
Yeah,
Holy crap.
yeah, I'm still long that, and folks know I've been long that for a long time, and I don't think I'm going to sell that. I mean, I don't. I'm looking for a lot of these mega techs to be a massive bear market low, and then they go and they continue. So, yeah, oh, nice one. Here's Mitch's. Here's the setup Mitch posted. That's a beauty with the three lows there, and the breakout of the trend line. There's a lot of those, and again,
At a support, $86 was very real support. I mean, that was a peak from September 2020 and valleys from November, December 2020. Just
definitely. And what do you think of these? I mean, just being conservative, what do you think of this going to an 886? I mean, I know target two is probably
jeez.
the correct objective, and that's about a 618. But a lot of these major techs are leading, and they're going to drag. I think they're going to drag the rest of the market with it higher. Forget inflation story narrative, interest rate narrative. This is a breakout in my book, any book really, except for maybe one of Bulkowski's books. But I just look at these, even do the monthly. What was last year all about? Was last year a major bear market, take you all the way down in a decade cycle, or was it a 15-month standard, which is the average standard bear market correction? And do we have something where people are looking for something like this to come up and then go all the way back down, because there's people still looking for this market because of the recession, because of whatever, to go back to new lows. I mean, 3,200 on the S&P, a lot of people are calling for, but you're never going to get that with major mega
Yeah.
techs doing stuff like this.
Yeah. It just seems like there might be just more. If this is the way it's going, like if every day is how it keeps going with banks collapsing, XLF, right? The XLE continues to reverse, which I think it's done. I mean, again, it could be completely wrong. There could be underperformance here, but it's doing everything that an asset would do before its whole cycle reverses. Um, you have a couple of sectors doing bad and you have tech doing well, then what is that going to translate into for the index funds? Probably more sideways. Oh, just every day, almost no movement up and down, and now we're in the time selling may go away where it's going to be even how in the world, like we're going to have even lighter volume, Monday and Tuesday of this week. It was the lowest volume on the S&P 500 of the entire year 2023. So if we're in May now, it's like, is it going to get worse? Is it going to stay, like this all month, all summer? Because that's going to be tough, man.
Yeah, I think these are piling into momentum plays that are going to continue to work. I think they're going to confound people, but you have the leaders, and the leaders are the big mega caps.
Mm-hmm.
Some of them are, the obvious: Amazon, Google, Microsoft. These are all playing catch up, and those are great for the indices because they hold so much weight in
Yeah.
each one of those. But then you've got your old economy stocks like McDonald's here. I think we had don't we have should be a crab up here, at least in the short term. No, no, not that. Well, McDonald's, Pepsi. I mean, these are all just continuing. At least, yeah, Pepsi was the one flashing a crab pattern up here, but it's super strong. I mean, this is Pepsi just continues to rock. I think it could make a run for the hop level at 200, but until you get some overbought triggers and you got nothing there, even
Pepsi, oh my God, man. It's just ridiculous.
yeah. I mean, and here's the thing that I come back to, and maybe I mentioned this in Tuesday, or maybe it was last week, about these type of stocks. Look, these are decades long bull trends. Something like Pepsi, that just doesn't stop. And I don't, whatever anyone's take is on the company or whatever it does. Look, these are the kind of long-term trends where every pullback you want a piece of it, because that's just going to continue. And you go to the Pepsi had a beautiful pattern here on the daily we identified back in March. Where was it? It was this crab pattern right before earnings, right down there at 168. It was the floor, and been seeing a lot of those. Let me clean this up. Where these boring old economy stocks are, they continue to defy, and they break out. Let me just remove the bearish patterns. Let's take that off, and you can just highlight the bullish structures on that. And I think this is the way to look at all of these types, is just be patient. We had a bat pattern last year at 156, another crab, overextended now, but let's say in a few months or 6 months from now, we just get another correction that kind of shoots off of some segment back down and then just continues. I don't think that's going to change. Despite everything that's been thrown at this, stocks like Pepsi and the other one, J&J, which is another one we were on all the way down here at 150, 152, and you look at this weekly trend, it just keeps rocking every pullback. And these are the stocks that people don't talk about that much, but carry
The
weight.
boomer stocks.
Yeah, I'm not quite boomer. I'm almost
No,
there.
well, I'm just saying like Charlie Munger and Warren Buffett, Berkshire Hathaway, like BlackRock. These are like the golden childs to them. I mean, this is like you know
Yeah. Well, I think
almost like
this.
they're a protected class. Like
Yeah.
some of these stocks, they're not that. Good luck, Bears. Good
Yeah.
luck.
Yeah. The hospice generation.
Oh God, yeah. Social Security, yeah.
But
Jim.
I think Clorox is another one where okay, pullback within
Jeez.
an uptrend, just starting to get going for a while. Stupid, boring, pays a little dividend. That's what's winning. That's what's winning. So definitely. Um,
I'll tell you this, man. I sent you the picture in the DM in Discord, and
oh,
it's
let's see
like
this one.
so someone requested this yesterday, but now it's doing the thing that we talked about it needed to do. And if this is real, this is it. This is actually it. This is the lowest risk entry for a trade for a long that anyone could ever take.
There's
Um,
Baba.
yeah, Alibaba,
Ch-
uh,
check.
buyers defending this ice line all the way back from 2014, 15 with this right shoulder and on the right shoulder it happens to be a local confirmation low, and it's so symmetrical to the left shoulder that also had two lows. It's absolutely impeccable. Like that is beautiful stuff right there, and it's almost identical to Nvidia, like in terms of the structure,
Mm-hmm.
but it's just based on we don't know ever where an asset's going next, but we certainly know when an asset is at the lowest risk entry area ever, where you can strategize a stop loss and equitable take profits. That's where Baba is kind of getting to right now today on this impulse up.
Awesome chart, Mitch. Really phenomenal, phenomenal read on that one. I've been a little down on the Chinese stocks, but I gotta go with it when I see it, and that's a beauty. And there's your 886 at around 88.20. You're currently 70. You're 87. But here's a monthly. Software's kicking out a beautiful monthly crab with confirmation. All of that is your XA level 77.64. That's a beauty. That's a monthly too. So
Yeah. Wow.
since the IPO, and I remember people chasing that sucker, saying Baba was going to take over the world. Well, you
Took
know,
over Asia for real.
yeah. But this is classic though with the IPO phenomenon. I can't explain it, but there really is something with IPOs longer term where they, once they set up, they usually have to go through some kind of cycle. And we saw that in Meta. We see it in,
Yep. Whole
uh,
year.
where this is a major 886 reset. I would think a 382 off of that, 157, it's a double from here, but that's not a crazy idea within that monthly structure. Nice one, man. What else is over there? In we got 10 cent.
God.
Is that doing
See, that's the
anything?
thing. I mean, I get Alibaba. I don't trust anything else, like because Alibaba's just they just are mass producing, mass shipping to everyone. Okay, but then you're talking about like information technology, like information services and stuff like TikTok, which is owned by Tencent, right? Um, yeah, I don't know. I think I looked at it, and when I did, nothing stuck out because you know how it is when you're like scanning through charts and you look at something you haven't looked at in a while, and if there's nothing there, in your mind, it's just like space bar. So
Yeah.
yeah, what's it doing?
A couple of patterns down at the low in November. Wouldn't be surprised to see this. I've really been shying away from Chinese ADRs,
Yeah,
thinking that they're really going to get long-term effects of the offshoring, but maybe that's what that cycle was. Maybe that was the 886 pullback now, and that should be it. What other,
you have Baizu,
Baidu,
um,
that was the one.
Baidu, yeah, and then you have like Tao and IQ,
There's
and
Baidu. Some nice confirmation down here, right where we are, just in the last couple of days. I didn't anticipate us talking about this, but great. It's been great. These are some great opportunities. Maybe Baba's better than Baidu.
Definitely, man. Just you got to think about like it's the Amazon. It's for sure Amazon of yeah, I mean it's so right. Why is it superior technically? Because Baidu, I don't think in any way right now is at some sort of strategic entry point. It's not at some. It's not like breaking some ice line. It's not back testing an ice line as support. It's legit in the middle of two major levels, $87 and $168, $170. So something can look like a potential inverse head and shoulders developing, and it can even play out randomly. But like you always want, if you're looking for a structural development, you're looking at that right shoulder, or you're looking for a ascending triangle, or any pattern that's coming to a demand line or whatever. You want it to be like doing something to a historical inflection point versus just it's randomly developing in the middle, dead middle of a range.
There is that K Web. That's the that's the Crane Shares China Internet ETF. Nothing really there. I mean, you had some big things at 20. Nothing up top there. Maybe some weekly things here. Currently, I think of those, all of those, Baba's probably your best chart. Even though that's not a bad chart. I'm not printing any patterns here, but you are to
Oh
the right of the
God,
downtrend. You've got confirmation around 27.
my B&B alert's going off. What the?
Yeah, we should jump over there in a second because alts. Where's the floor on the alts?
Oh, dude, it's some of these alts, man. They're gonna go to like all-time lows and fresh lows and lowest lows we haven't seen since 2018 and all that. There's not enough liquidity anymore. They like I just you have to not really be paying attention to the markets to try to like argue with the fact that like over the past couple months something's changed completely in that S-coin market. Like, because I trade this stuff every single day, all these altcoins for the most part, because hey man, there's been enough liquidity where someone's making a market and there's patterns developing, there's things going on, but now that's like gone. Like the January rally that was ushered in started out incredible. And then after that first impulse up, sometime end of January, early February, then they all hit these resistance points. But there's clearly too much supply at the next resistance points for most of the altcoins to be able to break through them to go to the next level. So they just started consolidating and bleeding out. And you'd think, oh, it'll pivot, make a higher low, and everything's fine. But that's when this whole like, all these exchanges are getting like they're either leaving the US, they're getting kicked out of the US, or they're now going bankrupt. Like Bittrex 2 days ago went actual, like they filed for Chapter 11. That is actually going to have an effect on micro S coins, right? You think about there's 18,000 cryptos out there, and you're killing exchanges on one of the highest volume, markets in the world. People that might trade it, they can't really get access to it anymore. They can't get on their exchange. They can't trade there anymore. They'd have to use a VPN. Just people are not incentivized anymore, and you're in a secular downtrend right now. So um, I don't know. That's kind of my thought on it right now, and that's the way they look. And even lately, some of them they showed some reversals, like dragon patterns or something at supports. They rallied. They maybe hit 50% 618s locally, and then they've rolled over. They've just new data presenting itself as they're making lower highs than the previous highs, and they're confirming it. And now you're just right back at supports. Where if this was like a bull market, you would have had a way more pronounced run. These things would have been going to their next levels. There's too much supply. There's not enough demand anymore. So that's just my thought process on it. From what I've noticed by checking it every single day.
Yeah, we've been looking at stuff like this. This is Gala. That's a fan favorite, I suppose. And again, a lot of them form patterns like this after the January thrust. And Gala is just a poster child for a type 1 reaction with a shark. And we've been looking for the retest down to 3.2, maybe as low as 2.8. 2.8 got hit. We have confirmation here, but you need to do things right now. I mean, I don't.
It's not going to, man. That is to me. I just look at your butterfly, or not quite maybe on this one, but most of them are like, oh, potential butterfly completed the C, going to the D, which is way lower than the lows from the beginning of the year.
Yeah.
That's what I'm seeing on the lower high right there. Yeah, it's
Well, this is Gala. I mean, destroyed, but you're looking at something down here, looking for some patterns down here. That's, after the major collapse of to trigger something off of these lows. And again, we've been talking about that. I mean, really since the first T1 target, a lot of these that developed, they were just reactions, and then they came back down. And so I'm looking now, but it doesn't look great the way some of these have collapsed.
Terrible.
You look at something like Doge, which is the same deal again, where Doge had a pattern and it did that big pop back in March. And I said, well, that's a type 1. We need to come back minimum 6.9, 6.3 area. And this were the arrows I drew 2-3 weeks ago. So nothing's really changed. And these 2 of 2 patterns now, that's, for me, that's what explains the deal. But it's stuff like, here's another one we were waiting on. And this one looks a little ugly, where
So disgusting.
we were looking at algo, and I was saying, okay, beautiful bat pattern down here, 17.5. You're now 16.2. What's going to happen? Is that just not going to turn around, not going to flush, or is it going to go to low to 14? So it's
So
definitely,
weak.
it does look weak. I mean, you're here kind of swimming in the oversold. I would need to see algo give you some kind of 3-bar turnaround. You haven't had
Please
that
tell me
yet.
how that's going to happen. Like, there's too many altcoins. There's not enough liquidity, and the weakness coming in is so bad. Like, this is another one. Algo, legit, looking at it, just blank chart. I mean, tell me that December 29th is not your X point, and now with that failed, of course, it's not completely invalid yet. It's about to break that December low. I mean, you're talking about what? Maybe a 1272 now, and that's like 12 cents.
Yeah,
And maybe using the B point, oh my God, it'd be a deep crab then if you used that March low as the B point.
yeah,
Then you'd have to have a 1618. 1618 is, dude,
takes you
that's like
lower.
7 cents.
Where's that? It's down at, yeah, right. Well, about 14 of that 1618. If you have that's a little throwdown move. You're definitely not doing what they should be doing within the window. We're after the confirmation and the hit, you're looking within that 5-bar window, 3-5 bars after the fact, and it's a pancake lower, not really busting any moves. So, it's not really what you want to see if you're messing around in alts. I'm in a few. I'm getting hit on some of these. Here's Chili's is another one where 11.28.
Disappointment, man.
Yeah,
Disappointment. My God.
but
Just
it's printing now. It's
kill it.
printing a pattern. Like I was thinking this would come back to 11.28. Now you're 10.6. But you have Gartley down here, and this is the only thing that's going to save these is if you print some kind of retracement, strong Gartley, bat pattern, and now you reverse. Literally, I would say in the next 24 hours, you need to hold. I mean, Chili's is oversold on all of our metrics here, but you don't want this thing sliding. You don't want Chili's going to new lows, which would be under. What's in the new lows are under 9.6 cents.
Dude,
So
it's just like unlimited downside below that level where all this consolidation's happened, where the pattern's been presented. It's like a straight line up, and then it'll be a straight line down. Uh,
with
if
that,
the support doesn't hold.
and that's the takeaway on the January uh, rush. Big up in January, and they all did major. Most of them did 886s and couldn't follow through, and now they're rolling back over, likely to come all the way back down. My favorite, the one that's just been printing beautiful patterns left and right, is this render. That's on a daily. Where's the weekly? There you go. Some back-to-backs to backs. This has been really kind of the poster child for this current setup, and I walked through this over the last few weeks of the reaction, the reversal, and then the repeat pattern to give you back-to-back bearish patterns. Hop at 248 was it. And it came right back to 165. I still say that could go to target 2. 136, and you're talking something that back
Nice
in
Harmonic.
beginning of the year was 40 cents. So it did a 6x. Now come back and pay the piper.
Comes straight down to $1, 111 to 86 cents. Yeah, this was showing 3-day classic bearish divergence on both oscillators. Someone had requested this on the stream like 2 days ago and was just screaming that, like, that's it, man. Like, I don't think this is going to hold at all. It was testing 181, which is that low from January of 2022. And yesterday it broke it. Today it's formally back tested that old support as resistance and is now rolling over near its session lows. And there's no support on render until, again, 111 or 86 cents. So that bearish divergence is starting to play out more. Down 9.23%. Let's go, dude. TA being respected right there.
Yeah.
For sure.
Yeah, I wouldn't, not even a thought. On you're 2 more
Bitcoin,
days.
bear drums.
You'd have to turn around. Bitcoin dropping. What are we doing?
Yeah,
Let's
it's
look at
just
Bitcoin. We
getting
haven't
there.
looked at that yet.
It's like, on the 4-hour, it's pretty weak. I mean, technically, I think Bitcoin broke the demand line finally of that. Someone could call it a neckline because, yeah, I'm not going to argue and say it's not maybe a head and shoulders. It looks like it on total, but it's like an ascending, broadening wedge, but that, again, that where demand should be, it is now being breached.
Yeah, this
As
is a
opposed
2
to-
of 2 with this. You have a bat. The software is generating a bat off of basically a 1
Oh, yeah.
month bat. There's a, reaction territory now coming back for the reversal. Yeah, I have some oversold signals down there at 27, right where we are right now, 27.3. What I would need to see is I need to see a yellow dot. All that means is we need our second bullish candle after the fact. So, if this keeps leaking and you break under 26,000, all right, you're in for something deeper. But I need to see stabilization. Like this could screw around for a while and just hold 27. Or if you fall apart and you flush and then you're really screwed, then the daily kind of resets. It's a tough. It's been a tough read because you really tried to flash above here. I still am going to go with, I know this sounds crazy, but I'm still thinking that we are going to try to reach for later in the year. I've been saying like September up to 37 214. I'm not saying this second, but we do have this daily oversold trigger that happened last week. And that was something I've been looking for basically the last month of staying in this range, 27 to 30,000, 3,500, and hold there. So if it violates this, maybe it's a shakeout kind of a thing like happened back in March before the larger run. I'm still, I don't want to say the word hope. I'm just still looking to this as a kind of a pause correction beyond that. I mean, I do agree your head and shoulders here a little more pronounced now than it was before. So you break the neckline here. You break, I think it's 26.5, 26.3. You violate that, then you got more problems. Then you probably do something. You could shoot off like a crab pattern. I mean, I've been looking for this retest, and we got there on a lot of those alts. And if it doesn't happen, doesn't materialize, doesn't stabilize like the next day or two, I'm certainly not loading into these above and beyond what I've already done the last day or two. I mean, I thought I was catching some lows yesterday, but it looks like garbage. So I'm focused on that. I'm focused on even like Binance Coin, BNB. That's another one that doesn't have to do much, but it just has to hold. But it looks like we have to come down one more test, and that's probably 300 generally. It's that's definitely set up. I don't know. You share your
You see what I
thoughts on it.
posted
Let me pop that back up. Oh, hold
on
on.
BNB and the DM?
Let me check that.
Like the kind of just your fundamental stuff, right? Rudimentary sell high, buy low.
Yeah.
It's just in case, right? In case we get a more pronounced rollover on the altcoins.
Yeah, it's here. I mean, when this is what we were looking for, but got to watch that. Got to see where we close as well. Really important to wait and see how we close because we've flashed down here so many times just in the last 2 months at that 27 level. You'd have a real problem if you don't recover later today. I don't know. You take a look at that. Hold on 1 second, Mitch. I'll be right back. Give him a
Sure.
minute or so. I got to grab somebody at my door. Hold on.
All right. Oh, is it just me here? Oh, this is awkward. Someone cue up the crickets, please. Yeah. So, well, there's the Bitcoin chart. I had sent there's that demand line I was talking about possibly being breached. And yeah, man, I mean, no movement. And it's like, going on 2 months almost. Let's just say 7 weeks, same effing price Bitcoin was at then as it is now. And just I'm rooting for some resolution, whether it's a breakdown or break up, get a pullback going so we can get a mild retrace. So someone could dollar cost average, you know, probably at 26.5 or maybe lower. What was there's like a demand line on Bitcoin I think Scott had up. Let me see here. I'm just anchoring from kind of like December 31st is anchor point 1, kind of on that like eve second higher low bottom, and then the low from March 10th. Those are the 2 anchor points for the trend line. And if you do it like that, chat, you're looking at a demand line test around $23,500. And that's pretty confluent with like, a level from July of 2022. It was like a peak. It actually goes back. It's this joke of a level that if you watch the stream, Crypto Face came in and he asked me, like, he was just, I'm long, dude. What's the levels? I think he was just screwing around, saying hi. And we're talking about 23,863 from December of 2020. And then it just started getting regarded as a resistance in July of 2022. And then even in February of this year. And now it's like it has not been really formally back tested yet since it was breached the date of March 13th during like the initial part of the banking crisis. So if you go back test that, it would resolve multiple things, right? Demand line test, horizontal line support, back test. Okay. And then, you get a common retrace. So there might be a little bit more value than what you got right now because just there's not really value on Bitcoin. And this is what I've been talking about is even if it kept going higher here, it's just, right, a technical setup. It is determined a good technical setup for like low risk, high reward is based on certain things. And if you watch Scott's stream or you watch my streams, well, you know what those are. And unfortunately, when an asset doubles in value in the course of 4 or 5 months, and then it's made its first lower high of the year, that first high was April 28th to May 6th, first lower high of the year, and back testing that inflection zone from history as resistance, those are bad things. Those are like bearish edge things. It's like, oh, someone has like a low risk for a short where they could have their stop loss just somewhere above 30,000 and let it sell off. So it wasn't like Nvidia a few months ago when it had the inverse head and shoulders. It's not like Alibaba now. It wasn't like Amazon or Shopify. It doesn't have those variables. So therefore, you got to wait for resolution. And it seems like we might start, of course, it hasn't really followed through yet, but that demand line's getting broken like right now as we're speaking. So maybe we get some downside here for a pullback. Okay. I don't know if it's just still me in here, Scott. Oh, it is. It's me still. Hey, guys.
No, I'm back. I'm here.
Okay, cool.
Cool. Yeah, no, I caught that. Yeah, I look, I'll say that if we crack this, we don't turn around the next 24, 48 hours, then you're looking at something deeper. I just, bit frustrating because when a lot of those were running in March, that to have that set up and have the pullback that I was waiting on those alts, and they came back, and now they hit the numbers, and they do it in an ugly fashion. That's not it's not what you want to see. You don't want to see it flush like it did. 10% down, 20% down, a lot of alts like it was, and
So illiquid. That's the way it's going to be, man. Like
yeah, and
just not enough on the order book.
and the progress in the longer term charts not good. I mean, you go to like something like Doge, that just I don't I think that the longer that does not make any new highs, even that last thrush up to 10 cents, and you come back down, well, it's going to just be a long time. I mean, you could go daily or weekly chart where your best hope is 6 on the downside, and then maybe you get another flash up to 8 or 9 cents, but that's it. I mean, that's not there's not a heck of a lot there. For I think what a lot of people are looking for is a moon, some kind of moon phase, and I don't think any kind of moon phase would happen until Bitcoin halving. It becomes the main deal, the main conversation, and Bitcoin is raging, and this would still only be a type 2. So we're still in reaction territory on all of these, that they haven't busted free. The ones that did have come all the way back. You look at here's another one that I've been saying for a while, which is this Fetch AI. It was that a 10x? Yeah, that was like a 10x low to high. And I've been saying let that thing come all the way back. I was saying look at 30 cents, but no pattern here. And I think the ones that ran crazy, that looks like it was a mini cycle. With this, we don't have any yellow dot. There's no confirmation that came in, and even if I'm going to connect dots on something like this, if I was looking for the next opportunity,
Garbage.
yeah, I'd have to say it's like, where's my M, where's my W? It's like this, and 886 puts you a lot lower. I mean, it's surprising.
Yeah.
It's like 10
That action
cents.
magnet move all day.
Yeah, back down. Without holding anything. This Fetch AI didn't hold the B point. You checked back. We had a check back, but which is there, but no turnaround, no stabilization. The other one that I'm still looking at it, and I've been saying, around the 530 level. Where is it? This ICP. You're back at 5.
So weak. So weak. I posted about that in the Citadel, and the whole thing with that is, let's see what I said. Where is it? Oh, the I was just talking about the weakness of it, right? Where it had a bullish dragon pattern at the bottom of the trading range. It broke out, right? Buyers defended the level, and what did it do? It underperformed. It went up to like a 618 once, and that was it, right? If it was a real reversal, maybe it'll pull back a little bit. It would not have been coming back down to test the bottom of the trading range where it is right now, and I think it's about to break it.
Yeah.
That's just like bear market behavior. It's like, okay, the bear market's still not over because the bullish argument that had been in the process of being created over the past few months, it is now confirmed to be awful performance. So therefore, who's in control of the market still? It's the bears, it's the sellers. Bitcoin beat just lows of the 4-hour candle hitting right now.
Go back to there in a second. Yeah, here's the check back on ICP. Our first signal there was what, 530, 530, 529. So check back for us is complete. And I would still need to see 1-2 candles. That's the development where you need to see, if you got a pattern level, you need to see 1 or 2, usually 2 candles that go in your favor. So you'd want to see 2 bullish daily candles just to stabilize before that even triggers. And it's this action right here is a lot like where we were back there in early March,
She looks like redistribution to me.
Yeah, come
Complete
on back down.
redistribution.
And every one of these just it's a pop and a roll. And so this next set of retests, if it's a type 2, whatever it is, you need 2 days. I mean, you need 2 days at these levels to give you some kind of stabilization. And that's why this looks ugly on that retest. I mean, you're down 7 days in a row, stuff like that, and you still can't even put in a bullish signal where you're starting to hit support. So
I posted the chart with that support kind of highlighted in your DM of
let me take a
ICP.
look.
Because it's like I think to me like it's just back at that level, and I don't think it's gonna. I do not think that the 461 support will hold. No way. Like you should not be doing. This is the price action that is indicative of like a failure incoming. Like one does not simply just put in 2 lower highs than the high from late February and then test the support once and then come back for a second time, and it looks like it's about to break the 200-day moving average bearishly. So it's awful.
Right there. Yep. I mean, what's that, a daily or weekly?
What's the daily?
Yeah.
So weak. I mean, this pattern should have it performed. I mean, it hit two of the targets, like a dragon traditional targets from the high point to the low point of the structure, 618, 786. It hit them, and that was it. It was like a trader's market. Okay, like some of these patterns are going to hit some of their targets, but they're not good. If they were outperforming, they'd be hitting their third targets and they would be exceeding them. So if this is how it's going, that's it, man. Bearish.
Yeah. Yeah, and these
by
are,
the way, BNB is hitting its lowest price right now since April 4th.
let's
Right
jump
now,
there.
So it's flushing, yeah, heading down to 300.
We're under 300 yet.
Ethereum has broken its like 60-minute like structure. It's rolling over. We actually right now have a crypto-wide sell-off at this current time. Total market cap beeps going off. Yeah, it's flushing. Total market cap is at its lowest price. Oh, it's about to be at its lowest price since late March. Yeah, this is at least we're getting some price action. While
There's
all you can
Bitcoin
hope
at
for.
27,000. Cracked it. Just cracked it.
Yeah, 26,999.
Yeah, I mean that's it. I mean your make or break right here, right now. Even your dot, all the triggers that we were looking at those are 27.3. And I don't, coming back here, I need to see some green candles. So if it's gonna fail, I don't see much in the way of being able to connect dots here, other than some kind of corrective. Then this becomes like a corrective. 1618 doesn't hold. Again, I'll go till tonight and see how we finish up tonight. But if that's an ugly candle and you get a 3-bar breakdown, I mean, which you haven't really seen too much of until recently, this day here, was that Monday, was a 3-bar breakdown officially. Yeah, I'm definitely watching this. I think 27,000, you have to scrape that, hold that. And again, if you find yourself under 26.5 or certainly 26, then you just clear it out, because like you're saying, yeah, you're going to run, you're going to flush it to some deeper levels. Just, that's March. March was 19.8, and I'm surprised to see it come down like this, but the alts definitely are, something's going on there. That is, they're extremely weak at critical numbers. That, you're there, okay, you're not going to do anything, or you're going to give us a big fat ugly candle. I'll respect that. I mean, it's things like, here's another one, this Axie Infinity. We were looking at that at 730, now 670, and that is it's a bat pattern down here. Yeah, a couple things. You got a 2 of 2. You got a deep crab down there. You have retesting with a bat, so that's 2 of 2. What happens?
Yikes.
Yeah, what happens when you hit the numbers? You're flushing through that. There's the XA level. There's 723. that was the
There's the
exact
break.
number.
We got the
Yeah.
price action. Bitcoin's flushing. Band alert just went off. About to breach the March 10th low. About to see the lowest price of 2023. Headed to the bottom of the range. I'm just like, I'll have these random S-Coin alerts set up just when they're breaking, levels, and that one just went off. So,
Yep.
but yeah, this is just this is crypto, man. This is how it goes in illiquid market conditions. This is, these are just as bad as the Russell 1000, which none of them make money. They don't turn a profit. They're just zombie companies. I mean, this is the same thing. Crypto altcoins that. Were any of these cryptos really created to change the world? No. They were created to enrich the people that created them, right? I mean, that's all it was. It was they saw someone get rich off Doge or something, and they're like, okay, let's make our own coin and let's market this thing and let's see how high we can push it, and then we can offload all our coins on someone's head. And they were doing this in the mania, right? How many new coins you hearing about that are getting created in these bear markets? That's how you know that all these are mostly scam beanie babies, because they're all getting minted, right? During mania cycles, during bull trends. None are getting created in bear markets.
Yeah.
Not really. I mean, yeah, you'll have like a couple. I'm saying just because there's an exception does not mean it's the rule, right?
No doubt. I mean, you're here. And we will, I think you'll know by tonight. You can't recover, or you get a flush today. Yeah, even the hop level in the 4-hour bats, 26.18. So we'll see. I'm certainly not loading in anymore. I thought it was a good spot on a couple of those. I mean, like that Gala thing is right back down, and that's the kind of action. Let's go here. Where's Gala? Because that's one I really just nailed that all the way down, and then said, all right, right there at the hop level, off the shark. But you're checking back. It's still probably you need 2 more candles. So that's the check back on Gala, and I think that's, in terms of patterns, one of the best setups that we've seen. The low on that is the check back low. That is your 2.79 cents, and you're right there now. So again, looks ugly. I'll see how it shapes up tonight, and really, I think by the weekend we'll know if this is something worse. Coincidentally, you got Bitcoin Miami this weekend, so
Next weekend, right?
or is it next weekend? I thought it was. What's the?
I thought it was like the 18th through the 20th or whatever.
Oh, maybe you're right. Yeah, that's true. And then the other ones that ran really hard, more of them from January to December to
Flushing, man.
yeah, March. They're going to come back down. That
The
was
FTM was like 200% off those on the reversal lows, that shark, and then the Momo shift and the spring back test, all the bullish technical indicators. Yeah, it mooned, and it's over now. It's just like a BAMM, like a new, like B point got broken, support broken. It's just rolling over like many. They even confirmed distribution. Old resistance became resistance again after the buying climax. I mean, it's just like they're going for full on 886s from their January, December lows.
yeah. Here's another one, Ethereum Classic. It's right now. It's back down to that 17 number, and here is the retest of the bat at 1625. It's just another one where it had done the pop in January and then had to come back. Basically, yeah, around 16, 17, and you're almost there. Not impressive, not really doing a heck of a lot other than a reaction and coming back down. So I'm looking at those levels, stuff like that. Another one that was a pattern, real nice pattern, straight on through at $11. This Ethereum name service.
Oh God, garbage, terrible. Probably
Where
all
is
time
that?
low soon.
Yeah, the bat was at
Yeah,
1127, and confirmation. We just got HSI yesterday, and that was at $10. So, and it's a 2 of 2. There's a prior crab pattern down there at 10, 11, 10 cent, $10. But it all depends on what confirmation you can get in this area. And so first confirmation we've seen that started yesterday. The best hope really is that this is just a check back literally happening right now. And that's at $10. You're there right now. You just retested that. And you'd still need to see 2 bullish candles, whether that takes 2 days, 5 days, 10 days before that's a go on there. But I'm looking. It again looks really ugly. I think it'll be really clear. You do an ugly close tonight. That'll seal the deal. That's really not what I was looking for here on, especially with a lot of these 2 of 2s coming back to retest the lows or the setups that started this from the December, January. There were patterns there. They did their reaction. They came back, and now, all
Yeah,
right,
there's a chance to make money, man. I mean, a lot of the assets went up 100+%, some 60, 80%, some of them 200, 300%. And then like, that was it. And then like the consolidation where you knew a pullback would be coming because like 1 or 2 of the targets of the trade setup would get hit. That's how it happens. People take profit, consolidation, then a higher low gets put in. But as all this time went by, Gary Gensler, SEC, banking crisis, liquidity, drying up, right? All panic, bad sentiment. And so instead of these consolidations, it's more like, oh, instead of minor or mild pullbacks, we're now getting deep pullbacks, right? We're going to those 886s. Possibly, if things are bad enough, we go to 100% retrace from the January lows, December lows. And then if things are miserable, then the long-term secular downtrend that was established last year or 2 years ago, really, that would continue, where we would see a new, fresh low of the entire downtrend, which that does not seem out of the realm of possibility at all with the current market conditions.
Yeah, here's that graph that had a little pop. I mean, that was 5 cents. It went to 20 cents and come on back to 5 cents. Hasn't done a heck of a lot since that pop. And the better sign, the one that has stuck out for me in the crypto space of real distribution, is this Ren, where they popped that
Oh yeah, it's
many
terrible.
times up to
Terrible, dude.
14 or 12 and just dunked it every time down.
So
So
weak, man.
that's not, and I've been saying this for a while, all crypto is not constructed the same. And you can see it in the charts. I mean, this is one that's not, it's just not constructive. It's just hasn't done a heck of a lot within that window. And even there's a better picture here. You go to let's see if we can get a longer term history. There you go. Longer term history of Ren. All-time lows were 2.8 cents. And there's not a heck of a lot there. Even on the weekly, I would still have to say that comes back to 6 cents or lower. It's just
the main question you got to ask is just like this at this point, with inflation being bad, even though I know CPI keeps going down, but not for, anything you consume or any services you get. It's just like, if money's harder to come by and you work hard for your money, you just start asking the question, why would I want to be putting my money into something like Ren, where it generates nothing for humanity, makes no money, right? So, there's technicals and there's fundamentals. And I think fundamentals start playing a big role in market conditions like this with tight money, right? Where now it's just, you have to ask those questions, in zero interest rate environment. Yeah, dude, let's trade some SPACs and Trump coin and, that Rocket Virgin Gold. I don't know, all the ones that are just bull crap, right? They were created because of cheap debt, and now they're getting destroyed. So it's like, clearly the market doesn't like that. So let's look for assets that are showing what we want to see, right? Like all the technicals, the harmonics, the type 2s, the divergence, the backtest of springs, all those things. But at the same time, we can find those on assets where they're companies on the stock market. They actually make money. They actually help people. They actually have, decent price to earnings, price to sales, earnings per share, right? I mean, I just think it starts becoming more important the higher the interest rates go, and the the worse things get, the worse the market conditions become, right?
Yeah, you need that climate, you need that environment. I think what crypto is not going to really catch fire until the halving takes shape, and that's next year. I do think things can lead up into that, but that halving won't happen until essentially a year from now or a year next April. And I would still want to see two of two patterns that precede that, no matter what it is, and a lot of them that are now coming two of two. All right, I'm going to take a hard look, but it has to be here. And if it flushes or dumps here, then it's not going to set up this year. And this is here's another one, your favorite Hex, and this just another example of crazy crypto. Still needs to have the retest, and this one another. I mean, that was a 10x off the low, but they're going to come all the way back where XA level is 3.8, and like those other ones that I've been saying, they have to have the retest, the type 2, before you can assume something larger is going to take shape. That's it. I mean, that shows us, really what we need to see before we can assume something larger than a reaction. And I think that's been the fight for a lot of people who want to see moon phase take shape, when you're not even close to being able to get out of reaction phase. Here's Bitcoin dropping new lows for the session
Yeah, session lows. Yep.
on the 5-minute chart. That's
26,850.
yeah,
Beer drums. Beer drums in the chat.
yeah.
BNB lows of the day. Ethereum lows of the day. Ethereum technically right now at its lowest point since April 3rd. So you're talking about 5-week lows on ETH currently, 5-week lows on BNB currently. XRP is not quite taken out its low from May 8th yet, but very close to being able to say lowest price since late March. So all the big four doing that. Bitcoin's about to, because of the crazy wick yesterday, that has not been taken out yet. That's 26,800. Once that gets taken out, then we could say safely on Bitcoin's at its lowest price since late March as well. So, yeah.
Well, here's that daily. Oh, sorry, that's 4 hour. The daily right there. You're back here at where we looked at this confirmation. We've been talking about that, a week, 2 weeks now, of why that's so important. Yeah, I would say a close under yesterday's low. I mean, if that closes under 26.7, I'm gonna have to say, all right, back off until something else develops, some kind of M shape off the top, um, and more time. I mean, does that mean we go all the way back down? I don't, I'm not there yet, but it's not doing what it should do at the levels. We're at the levels we've checked back, and it's doing it in an ugly fashion. So that's what it is. I'm not initiating any new longs unless I saw this really stabilize here. And like I said, it's a 2-day wait. Maybe this weekend if it stabilized, but that's not stabilization. It's breaking new lows right now. So let's see. We're looking for those spots inside of the longer term trend where it could be a potential opportunity, but it's not there. I mean, it's not there. And at least Ethereum, Bitcoin's a little bit better, but not much better. Ethereum is weaker, dropping below these levels where we've already done our tests. And 1780, that's about the max, I would even say, for Ethereum, 1780. So let's see if that holds into tonight's close by the time we're streaming. And just to let everybody know, everyone jump over and get with Mitch Ray over on YouTube. It's at Mitch Ray TA. He does a nightly show, and he's got everything. Here's some of the stuff we did as well. I remember that, man, there's that Paula thing where we did it with Paula Webb. That was a year ago. Amazing. But he's got a lot of the live streams and great stuff on his site. Join his Discord. Get with him. And for me, you folks know the deal. Go to harmonictrader.com and just become a basic member. Get with the software. by the trading view. You can try them all, but send your username to hpc@sr-analyst.com. And while I'm here, first one to type in gold will win a gold membership, and that'll get you software too. So who wants to type in gold and win a 30-day gold membership? You got it. Also, someone that is, who was the first one in there today? We'll have to check that. I saw who it was, and we'll reach out to you. And you have to connect with Miss Stephanie on my Discord. Tony Torres.
Did you, oh, sorry.
What was that?
Oh, no, I was about to ask if you had looked at KRE today, the regional banking ETF.
No, let's flip back to stocks. I think everyone's had enough of the
Well, it's just like, man, crypto is just not the market. Like, there's just, if you're shorting, okay, shorting, that's probably the play in the short term. I mean, yep. I'd posted several trade setups on shorts for some altcoins. That's about it. You know, like just because they're confirming tops, they're hitting resistances, they're failing to break out, there's a bearish edge. You know, it's kind of like there's the edge there, and it's easy to strategize a stop loss and let it run. You know, let's see how far it goes, how much follow through will the sellers have. You know, it's always the question. So they've started playing out, but they haven't completely played out because it takes time. But yeah, I think the regional banks are really interesting, just because it's today. I mean, the KRE is at like it's rivaling the prices it had during the meltdown on May 4th. And it's currently below 3687, 3660. It's formally back testing that level as resistance only today. So like what was once a major support resistance from years ago, from 2014 and 2015, it's now resistance. It's flipped resistance. And you got to wonder what kind of consequence that'll be if this is how it closes today. You know, PAC W collapsing again down. You know, it was down over 30% at one point today. I think it's recovered a little bit, but gap down. And so like you think, oh, the banking crisis is over. And just as you think it is, nope, it's back in full force. You kind of figured, because how could it just end when the Fed raised interest rates last week, 25 basis points, which high interest rates is what's causing the collapse of these banks. You just made it 25 basis points worse. And you're trying to tell me that everything's good now? Like, that's crazy. That's insane. That's a gaslighting. I think that's what a lot of people in the media have been doing. Is like, hey, everything's fine. Bank crisis behind us. And here we are on the KRE. Not good. And the bank stocks down a lot today.
Yeah, down again. I mean, they're kind of relentless down. And that's the concern. I started off today addressing some of those. Here's that Western Alliance Bank Corp. I think this is the next one of the West Coast banks that could really be vulnerable if it doesn't hold. And a lot of them are back to their all-time 886, which is amazing. That was 120. You know, there was 27, but you hit 10 last week, and that's where your all-time 886 is at around 15. Tell me what it's doing. And it's not. You have HSI, you have some stabilization, but you're still, again, 2 more weeks away from even considering it. And this shows up in the bigger banks. One that I went over Bank of America, why that was something a lower needed to retest 26. Here's PNC, another one where you're a 2 of 2 on this deep crab off the top, but there's confirmation a lot lower, and it's still, you check back and you're straight on through. There's no, how we look at confirmation. Look, it registers, it has to retest, and then it has to, it usually takes a couple of bars. So if you're staring a pattern in the face, and you want to see a couple of bars develop before you can even anticipate the thing to run. And it's even on a reaction, we see that, where you need a bullish bar. You need 2 bullish bars to get going, to develop something larger, and that's not happening. I know the monthly looks like, the monthly's probably the way to look at this, because you look at these candles.
Yeah, they're just brutal. And it's below, anything below 115 is a bearish breakdown. And anything below 115 long enough equals $100 if you look left at history. I mean,
yeah,
outside of that one volatility crush in 2018, late 2018, that was it. It's straight down to $100, and that's a 12% drawdown below 115. And it hit its lowest price today, PNC, lowest price since, my God, man, October 2020. You're talking about multi-year lows. There's Bitcoin. Bitcoin alert just went off, lows of the day. So yeah, PNC, right, technical breakdown. It has occurred. It happened yesterday with confirmation of bearish engulfing candle and the candle close. No back test, but just gap down today because you're so weak. There's one bank I'm looking at that I think, and we talked about it last week in the DM. I posted it to you. I even tweeted about it. It's the OZK. It's not just fundamentally impeccable. It's actually technically impeccable, and that's the word for it. Because and I DM'd you like the updated chart if you want to look at it, and it's just perfect to have puts or be short. It's a perfect level to manage one's risk. And there was way better opportunity at the type 2, of course. Type 2, I think you had hidden bearish divergence up there on that second high. But now the fact is, what was once the most incredible ice line, right, the most important level in this chart, which was $35, $36, has been formally back tested as resistance. And that is the strongest form of confirmation you could get after breaking a support is the back test, and now the follow through. And look at it today. I mean, just where the downside is so large. We're going to go down another 33% easily.
Yeah, that sucker's sliding. I mean, it's nothing.
Look at the back test, though. It's just so good.
Yeah, I'll go to the weekly. There's your weekly.
But remember, the thing about this one that makes it special, especially bearish, is it has, of all the regional banks that exist in the world or in the United States, this has the most exposure to commercial real estate, and it's 71% exposed, more than any out there. So if you're talking about that's you're talking about like earlier, hey, let's look for assets that actually make money, help the world. They make billions of dollars quarterly, and they have good technical arguments like Amazon had with the piercing line on the back test of the 2018 high as support. After the inverse head and shoulders developed, or that Momo shift, right? And same thing on the bearish side, where this gives you the strongest bearish argument to go short. It could be the exact opposite, right? I mean, where it'd be like Amazon. But yeah, here it is. My alert on OZK just went off. Lows of the day. It's down 3% now. Very nice. And there's no support here where you are. So anyway, Bitcoin's rolling over at its session lows right now, 26,782 and falling. We got some price action, man.
Yep.
Melted down.
Dump stream. Here we go. Dump it.
About to see 26,682, which is the absolute bottom
of
the range that was created March 18th,
Done.
St. Patrick's Day. It was also tested March 23rd. It was also tested March 27th, and soon to be May 11th, 2023. We are just dollars away from that support. And you got to wonder, will it hold this time? I doubt it. I doubt it holds this time based on the context. What is the context on Bitcoin? If you look at the 60-minute, you can see the buying climax April 14th, and then the big sell-off, and then the attempted rally, right? The buyers attempted to rally the price to take out those highs from mid-April at 31K. They failed. There were less market participants involved on Bitcoin April 26th, April 30th, and May 5th, it confirmed less market participants with, this double topping, two highs that are both significantly lower than the highest high from April 14th. That context lets you know less than before. So I don't think the support holds this time based on what has happened before this new test we're about to receive at this support.
And there it goes. Right there, accelerating on through. Got about
close.
6 hours to go till 5 hours to go till the close for the day, and that's scraping the low here, scraping the bottom.
Apollo Creed's trainer out there somewhere screaming, "Throw the dang towel."
Yeah,
he's out there. Apollo Creed's twitching, sponsored by all the regional banks.
Yeah, and that was something that I think we haven't seen, that where Bitcoin running the same way as the banks. Banks are down, Bitcoin's down.
Yeah.
They've been running inverse
Recoupling
for months, and now it's just it's back to
KRE beep. We got a big sell-off right now happening on the banks as we're speaking. It's like it's gone back red on the candle on the daily again. So
Yeah.
yeah, PACW down 23%, SoFi down 5+%, CMA down 4.77%. A lot of these banks looking like S coins again.
Yeah, and that's
Like
the
crazy,
problem
man.
when these no, because look, 2008 we saw it, and at other
Yeah.
points in time with these bank crises through the years. This is not uncommon. I mean, there's 2020. It took it. The regional bank index went from 64 to 28, so a 60% haircut. Here we go again. You're not even 50 yet. Maybe you come a little bit lower. You do 60. But we've been here before. Yeah, go back there as the two. Amazing, and it was funny is they launched. Look at this in 2007. I remember they launched a bunch of sector ETFs right before the top in 2008, and there's your
Interesting.
2008 right launched right before that, like 15 months before, and then
They wanted some exit liquidity or something.
probably, but straight
It
on
sounds like
down.
Bitcoin in 2017, right? Like the CME launched Bitcoin futures and CBOE
Yeah, yeah,
right at the top, like literally the first trading day of the CME Bitcoin futures was like the massive drawdown day, I think. Like the first, flush close and reverse candle.
yeah.
But if you're looking at the S&P, that shooting star on the second high, right, May 1st
Let's
is
go
still
to
valid.
SPY.
SPY, yeah, SPX, SPY. I see it on your screen. So, yeah. Oh, sorry, you're on the KRE. My bad. Yeah, my
I
bad.
was on the
Sorry.
KRE. I wanted to go check and see what's going on. Where are we in the SPY? Kind of rolling over.
Yep. Yeah, kind of lows of the day or near it.
I'm usually looking for some kind of midday signal. What do we have here? Nothing yet. Usually around 12 noon, we get a good, hold on. Why did I have that on that time frame? Let me go to New York. Not that it matters. And I'm usually looking for some kind of midday inflection I haven't talked about this yet, but the 5-minute pattern, I usually bring these up right now on SPY, is a butterfly going back where 409, your 410.70. We should see 409 for that full retest on the 5-minute. There's been a lot of great 5-minute setups on the Qs and the SPY just for the day. And there you go. Same deal on the Qs. Okay. Yeah, we're coming back for the type 2. That would be the kind of the midday opportunity, everybody. Although we're past it, really we look for that in the lunch hour. But another nice pattern, but it's lower, 324. Really quick, just to show, I've been really on a lot of the 5-minute Microsoft and Meta setups recently. It's been a lot of stuff coming back time and time again, just as day trades. Down here at 305 on Microsoft, it was from Tuesday. I talked about that. We actually had a couple of those that worked out really well, and Meta too. And these are only day trades, folks. So please be aware. Oh, now you're flashing a butterfly right now on Meta. A nice little 5-minute setup. We're 237. Maybe come back down to 235. But we've had a number of these. You just go back. Here's some of the patterns from Tuesday I mentioned. So there's been a lot of 5-minute setups, but all of them are reactions. And just take note of that. We haven't had anything really explode off of these. Just simple day trades. That's it. And you go here, go back for Meta. We did register this hourly. It's almost a perfect type 2. It's not quite there yet, but 230 on the hourly, but not exploding, not following through like Amazon or Google or Microsoft, but just still be aware of that. I'm still looking at. Oh, get back here. What happened to that? Sorry. I'm still looking for this for places this to continue. I mean, I think you got a fragmented market. Banks are they sell the banks and pile into the mega cap, mega tech, which is fine. It's just, when does this roll over? If the tech rolls over, that's the only thing holding up the market. Then you're going to have something bigger in the indices. It's just not quite there yet. Microsoft, Meta, Google, Amazon, and the rest of them doing worse. How about the Russell's probably going to reflect some of the weaker stocks, and there you go. There's the Russell, totally different than S&P and Nasdaq.
It's so manipulated though. It's so like muddied, because if you could really, I'm still trying to figure out, maybe how to check out the Russell 1000. Let me see if I can just type that in. The Russell 1000, the RUI. RUI, yeah. It's actually holding up like, it looks like the S&P 500. I can't even believe that.
Wow. Well, there's another nice back-to-back, so it's
yeah,
like
but
kind of like
look at
QQQ.
Oh my God, though, 2280. Look at that support resistance. It's
Yeah.
It's so bearish. It's like almost a great short opportunity, right? One could go short now on the RUI, have a stop loss somewhere marginally above that 2280, and if you get stopped out, whatever, then that means like the S&P is breaking out, and okay, then we might be running for that full reset for the 886, the global one. But if not, this is the second test and a failure. It almost looks like a bear shark, and it's like a sprint. It's like the up thrust February 6th, and now the back test of the up thrust is occurring between April 17th and May 1st. So
There was a perfect type 1 reaction. Now you come back.
there it is. Yeah, that's exactly what I was looking at. Just eyeballing, and your software generated it.
Yeah, I mean, the 2212 was target 1. It hit that. I would say, all right, if you come back and retest, like you said, 2288, 2280 area, I'd want to pay attention to that. I like the Qs, and maybe this is what's going on, is that like with the QQQ and the SPY trending back to do a final test or a retest of those higher levels, and then we ditch it hard. Maybe. I mean, I could see that. And the Russell here, you've printed a number of patterns. You go back here even since last year. It's your third bearish pattern. And every time basically you try to make the run to 2300 on the Russell 1000, they've dumped it. And what's the weekly? I thought there was something here. Was it weekly? Maybe it was daily on this one. The daily is still, yeah, it's a shark off the top, but the interesting thing about the shark, I think many of you know, the shark turns into a 5-0, and that's likely what's basically capping the Russell, and those are the smaller stocks, and that's why you're not seeing a broad-based real expansion yet. There you go. Go to the bottom, and then the 50% level is 2300 on IWM. So if the shark became a 5-0, which it did or has, then you're probably a 2 of 2. This is probably the second retest of the 5-0. You come back down one more time. Amazing though how those are RUI versus IWM are.
The thing about it though is like, I don't know how, but I saw this. Someone had the data. Maybe it was on Bloomberg Terminal or something. But you could, if you're able to identify or aggregate all the losers of the Russell 2000. The Russell 1000, I don't think is like the worst ones, but like the bottom 1,000 of the Russell 3000 or whatever, they're terrible. They've like collapsed, and they've been like kind of crashing. And so this chart doesn't do justice, nor does the IWM itself. I wish I could find it. How to get the worst losers of the Russell 2000, Russell 3000.
What about the Russell 5000, and see what that is? The 5000. No, it's 2,000. What am I thinking? It's
Well,
the
there's the Russell 3000.
no. I'm thinking of the Wilshire 5,000, which is one of the broadest. Wilshire 5,000. Yeah, that's not a good one. Let's see where. I'll have to look at that. Looking for a super broad-based market. Just kind of gauge, see what the larger composite's doing. Or you know what's a good one? Another one is NASDAQ. So if you go NASDAQ composite with the 5,000 stocks versus the 100, it's in the daily. There you go. It's a shark. It's another shark here retesting. Now we've had some bullish readings recently where again I'm looking for higher in these zones, but I'm not going to ignore the fact that there's a lot of static resistance up here. 12.
Yeah, you're testing it, you're failing it. You have not taken out your previous highs yet, even though you're so close. It's just safer to wait for the break and then the confirmation of the back test, you know. And if it never back tests and breaks it, then there's no confirmation. So therefore, when it does come for the back test, it may very well fail, and you know it's just like a whipsaw rollover. So
Here's the monthly
just,
on NASDAQ composite.
yeah.
That's 5,000, and so that's a monthly. Again, I think waiting for the monthly close, such an important candle. Last month, you felt just shy of being able to do a devastating, I think, bullish monthly candle. And
Yeah.
this one, you would almost want to close the market right here or slightly higher. You really need to see another bullish candle, and it needs to break out of this 3-bar range. That would be a break above the high there, 12,270 really needs to happen with, or no, sorry, 12,270. And you're there now, but you need to have a real convincing monthly close here for that to get going. And if it does that, I mean, this is where, bank index looks, opposite to the techs, the XLR, that ETF. There you go. Where'd it go? What is it? What's the
The what?
XLK? So
Technology, yeah.
yeah. I mean, that's another one where the monthly closes, the monthly bars, they look pretty promising, but you need to see that continue. And still early, but if it reversed, or let's say you took out last month's low and you close under like 143, then I would have a concern. I'm still thinking this is pretty fine development off of some important oversold signals from last year. I know the daily on this had some at the low, had a couple of patterns down here. So we are ping ponging back to back on a lot of these patterns. I'm going to have to respect this shark, maybe as high as, like I said, 157, somewhere in the 150s, as our structural resistance for now. Again, I still think despite the banks and everything else, I think we can maybe go a little bit higher. It's if it rolls over, like let's say before the end of the month, this thing doesn't act the same as it did when it started the month. We'll have to take a hard look at it. I mean, I really will. It's the banks blowing up is not a good thing because that happened in 2008, and then it accelerated and it took people by surprise. And that's
Contagion, yeah.
yeah, and that's the thought I have where that 2008 thing came on strong. I felt, frankly, it felt kind of rigged the way that it did happen, but that's a whole nother discussion. But the thing of these flies dropping, like it was First Republic and Signature and SBNY, there's other ones that, I mean, just disappeared overnight. A couple more of those, then you're going to have a problem. You're going to have this spread out worse. I would look at stuff like Bank of America from a pattern perspective because That is, I mean, it's 2 of 2 right now, and I'm watching it. Did we hit exactly? What was it? 2680 is your exact number, and I mean exact because it's important to see what happens when it hits the number. You almost hit it today. It's not quite there yet. I still think that could come as low as 2541. So with these banks, you're still down on a lot of those that if you wanted to get bullish, you're early. And that's always been one of my biggest problems is being too early.
Yeah.
And I wanted to show everybody this Citicorp, not what it's currently doing, although there are, I mean, interesting. You're trying to flash some patterns down here at 41. But 41, this isn't really the number. This is 45. People forget they did a reverse split. So if you want to get some perspective on just wrecked banks, here's what Citicorp really was like. And that's the real deal. And this could be a PNC in the worst case scenario, JP Morgan if it really gets crazy. That's the thing you want to be afraid of. And looking back at some longer term levels, if PNC, and I'm going to pull up JP Morgan and Schwab in a second, but going back to your 2008 example, if you're going to see the majors get wrecked, it's going to do stuff like this. So you're going to break your long-term trend line. You're going to break some kind of critical structural low, and hey, maybe this is support. No, it's flushing and goes all the way to the 886. And I don't know how it happens, but that is something that you have to be aware of, as crazy as it can as it seems, where uh, major markets, if they bust their long-term trend and then they break down, it's once you get past certain areas, then you're just on par for a full 886 reset,
Mm-hmm.
that's what happened to Citicorp. You have never recovered above that.
Yeah.
I mean, this is kind of a lie, a big lie that's been perpetuated, or at least in terms of the narrative of the banking sector having recovered, or that they fixed the stuff from 2008. You look at Citicorp, and that is pure evidence that no, you really haven't. You just shuffled things around for the decade, and
Yeah.
that would be the concern on the banks. If you go to J.P. Morgan or Goldman Sachs, would be
Should
another
test those
one.
lows again.
Yeah, I mean
Like the
well, with J.P. Morgan, and this would be again a potential sign, like if things are falling apart, just like I showed you in that Citicorp. You break the trend line, which you didn't yet, but I'm talking like if this really falls apart here and then you break under 98, it would be the same kind of a deal, unthinkable deal, but that's what I will look for. I mean, it's if JP Morgan's going to do something like this, I'm not saying it, I'm just saying what to look for. What are the historical patterns,
mm-hmm.
if you will, that have repeated through history that would suggest, okay, this banking thing is more severe. We should be more concerned about it than just like listening to Jamie Dimon and other people.
It's like systematic, right?
Mm-hmm.
They let me become something, yeah, far more threatening to just the economic system
Yeah, if we're looking
than
for
just regional banks dumping.
yeah, if you're looking for contagion, you're going to see it in stuff like J.P. Morgan, which is a 2 of 2, and it's retested up there, and it's it's there. Hold on one
Bearish
second,
back
Mitch. One
test, dude.
second.
Like,
1 second.
sure. It was interesting. 2008 and 2001, there were bear market rallies that concluded in May. One in 2001 was May 21st, 2001, where after it peaked out after its bear market rally, right, from March to May, it appreciated in value off its lows 22%. And then after that 22% bear market rally concluded, another 28% drawdown occurred in 122 days. and that was of course the lowest low of the bear market from 2000 2001. So it is just interesting to think about. Here we are in May again, and in the last two very bad bear markets we had, you know, it's just interesting to see where we are in time and what's happened in history. The other one was in 2008, where May 20th, right? Let's just say May 19th, 2008, there was a beautiful like shooting star reversal on the S&P 500, back test the 200-day moving average, and that came off a bear market rally that lasted a good 116 days off the lows. And then after that, of course, was a drawdown that took you to the lowest lows of the entire bear market, global financial crisis. So May is the month. If you want some drawdowns, could be the end of the month.
That's May 2008 right there. And if we are there right now, and we do have patterns here, at least on the daily levels, how many times have we seen the 886 retest? I mean, the 2001 almost. I mean, it was an 886 versus the 98, but even up here, you came back another 886 retest. So where we are now, yeah. I mean, look, if you're looking for a similar pivot, JP Morgan, and if we really get problems here and this rolls over, it's very good we're talking today, because a great way to kind of get this out of my head, that would not be a historical aberration to come back and do the swing 886 off the pre-COVID low, whatever that was. And then that's at 85, 90 bucks. That's where, look, if that happens and the banks roll over, the big ones like this, yeah, then you're gonna have some consequences. Let's see what happens. Literally, I think between now and the end of the month, if this doesn't shape up, you could see that come together. Here's
heavily on bank stocks. It's a little more iffy on the index funds, but definitely bank stocks could be. They look like they're setting up for an end of May collapse. And I'm talking technicals only. I'm not talking about sentiment, feelings, fundamentals of interest rates. I'm talking about like what a lot of these assets are doing as they're breaking key supports already. As of the course of a week or two ago, they have now formally back tested them as resistances, and they've begun to catch some follow through to the downside, and that's confirmation. So we're just in the beginning stages. Like the things that technically need to happen before massive drawdowns are happening. So that's like TA respect like crazy. It's just not really completely played out yet. And I think you give me some more time, I think you'll see that follow through.
Yeah, and the big ones. I mean, these are regionals, and yet they can pull out 50 billion out of their, and basically cover deposits. But when you get to these big guys, or something like Schwab, that's another one I'm looking at where
it's sketch, man.
That is sketch, and that's a problem.
It broke support. It's below support. It's the target's $38 to $36 from here. It's almost $50.
Yeah, and it's trying to show a Gartley here at 47, but again, if you spent, when are we done here? 6 weeks, 8 weeks here at 47, and if we've checked back, but you can't even put in a bullish weekly candle. I'm watching that. You flush under the lows, folks, under 45.50. There's only the hop here, and we're seeing this repeat over and over again. These are minimum objectives that it's more likely to come down to this 886 pivot, another COVID 886. How many times have we seen that? That's down at 35.
Yeah, and like, instead of the Gartley, which I think is being generated, I mean, to me, I'm seeing a B point of a 786, meaning if you look at a 1414 fib extension for the D point of the butterfly, 1414 is confluent with $38 of the ice line. So I'm just talking about here. I'll just send it to you so you can see it.
Yeah, let me see that.
because it's like TA Tetris. I call stuff like this when it's like, oh, the extension lines up perfectly with an ice line.
Nice.
There you go, right? I mean, it's kind of perfect wave structure. It's a very bearish wave structure because of that deep B point, and then the lower high on C is signature.
Yeah. Yeah, that's a connect the dots kind of a thing, I like to call it, where yeah, your B point lines up, and that's one of the primary rules with harmonic patterns is look, you can trace M and W formations, but where's the clearest B point? Because that B point, the reciprocal of the B point tells you what the XA level. So if your B point's a 786, your reciprocal XA projection is a minimum 127, and we know that the butterflies usually run over to the 141, 142, and,
Yeah,
and that makes
but it's
sense.
confluent. The confluence of the harmonic of that 1414. It lines up with a swing low from December 2018, swing low from April 2017, even October, September.
Yeah.
Yeah, it's an ice line. It's a very major level, and then you can look at the historical price action between $38 and 51.50, and it's straight up, straight down for the most part. So it just makes the most sense as a good target area. Yeah.
What about IBKR? Interactive Brokers has always been a super strong stock, where these could get, yeah, even that one. I mean, there's deep crab up. This is type 2
That's
up
so
there at
ugly.
79. Yeah, I mean,
So much distribution.
yeah, this has been a strong stock, but
That
your,
failure, dude, that 2018 peak failed again. It's
yeah,
like that's so bad. It's like anything, the closer you are to $80 for a short, the closer you are to the lowest risk area you could ever go for a short.
yeah,
So
where
you're
it's,
75 now, so you're a little off, but that lower high that got put in April 17th is super telling, and it's almost like head and shoulders behavior. It kind of just looks locally since February like Bitcoin, right? Where you had the buying climax, the highest high, sell off, and then the attempted rally from buyers, and they failed to recapture the highest high, and then they began to relent, and that lower high that and coincided with the failed breakout attempt of the May 2018 ice line. That tells you, I mean, the next target, if this is a real bearish breakdown, which it seems like it is now, next target's $60 on IBKR. It's kind of beautiful here.
yeah, yeah, it's a 2 of 2, surely, and you still need to retest a butterfly down here where, yeah, the fact that these are not recovering is not what you want to see after such destruction, and they all were evaporated. I mean, here's First Republic Bank that, yeah, I mean, it was, where did you go? Where was that the one? No, where was it?
FRC, it's FRCB now because it got relisted, it seized and relisted OTC.
Yeah, I mean, 110 to 42 cents, pretty good. That's a nice short, 140 down to 42 cents. And that was in 2 months. That's what happens. That's what happens with the banks because once they go and once they know that they're full of it or not full of anything,
Mm-hmm.
then they get eviscerated. And it's, becomes a problem where the stock valuation's meaningless if if you expose a whole bunch of liabilities. Here's the other one, is Key Corp. It's another one that's
Oh God, it's so bad. Yeah, yeah.
just,
You're right though. One of the members of my like Citadel Patreon, he said he's been liquidity risk has been his profession for the past 20 years, and he said one general rule is once you feel the need to start publicly defending your liquidity position, it's already too late, and that's what PacWest did this morning. They said they had $15 billion immediately available liquidity, and look at it as they're saying that as their asset gapped down 30% today. So it's clearly panic, right? So sorry, just playing off what you were saying.
no doubt. No,
Oh.
I've been through them. Been through a few of the bank collapses. I mean, you had it in the early 90s. You had it in early 2000s to 2008. We're kind of due. You're really kind of due. The only reason why they've gotten away with it is because of a lot of the stress tests reined them in only
You did.
for an extended period of time, but not anymore. I mean, now it's you're finding out with things like First Republic and some of those other banks. There's no regulators there. So they despite everything they tried to put in 2008, that was not sufficient to prevent the collapse again of another bank crash. And I don't see how they're going to be like if that was the case. And it wasn't my intention to get on here today and talk doom and gloom about a bank crash, but
That's bullcrap, because that's not being doom and gloom. That's actually, we're talking about reality here.
that's what I was
Okay,
just about to say.
it's reality, and
it's
people.
what's happening. Yeah.
Yeah. There's too much there's too much non-truth being spoken in the world. And you know, would you rather us lie about what reality is showing us, not just fundamentally but technically too? I mean, if you have technicals and fundamentals lining up, that's a paper bull, right? I mean, that's not like literally like bulls bears. I'm just talking about, it's just that's a metaphor or a simile there. So it's like, you better run if you see the bull. When the technicals and fundamentals align like this, it's probably more telling. Like, okay, for instance, I posted the Goldman Sachs chart in the DMT, so you can see what I'm talking about. Like, Goldman Sachs is a major bank, right? Of course. But look at the technicals on this. What's just happened? This is telling you what's most likely coming next. Same thing that happened on JP Morgan. Same type of formal bearish back test of an old ice line from 2021 is now confirmed resistance. The 200-day simple moving average is confirmed rejected. And there's just so much downside here after all this redistribution began in November of last year, continued in February, and is now accelerating just at the beginning of the month on the bearish back test, right? How acceleration is where, these attempted rallies from buyers become far less pronounced than before, right? Where the first high, where you topped out after that bear market rally November 28th, well, a drawdown occurred, and then an attempted rally to a 78% retrace in early February. Okay, then that lower high was confirmed, and then a massive drawdown occurred, breaking key supports, and then an attempted rally, but that attempted rally was unable to make a 78% retrace again because of resistance now looking left. And that's what you did, back testing that level. But so you only went to a 50%, 60% retrace compared to the 786. So you're like, the distribution is accelerating on Goldman Sachs and JP Morgan IMO, in my opinion. So
Yeah, JP Morgan's probably the better spot even than Goldman Sachs, but I agree with you. And that last test and getting rejected on that 200-day moving average is, that's
pretty bearish
pretty
divergence to boot.
pretty telling. Yeah, yeah, yep. And you got your MACD expanding, and that's just another sign here where this is waning and come on back down to at least retest pivot lows. I think you're really close on Goldman Sachs to triggering from 320 back down to that 280 level minimum. Let me go back there.
Yeah.
Oh, let me bring this back.
Well, yeah, and you just gotta, and you look at the chart, you can clearly, you have to understand, these ups and downs. These are buyers presenting an argument. When July's low got put in, right, July 2022. I mean, those are the buyers. Finally, the sellers stopped the selling over a long period of time. So the buyers take back over control of the market for these rallies, and the conclusion of this long, 8, 9, 10 month bear market rally, the conclusion is there are far less of buyers involved than there was in January of 2022 and November 2021. Okay, distribution, and more of it now. And that's it. So if that was, you had, how long was it? How many days? Let's see, from the bottom to now, about 300 days, 288 days for the buyers to present an argument to us, to change our mind about the trend being completely reversed. They have now not only failed to change our mind. They have now reconfirmed the understanding that the secular downtrend we were in is about to continue. That's the way I'm looking at this.
Yeah, and the weekly's got some levels to retest minimum. It definitely it's this the even if Goldman Sachs was to hold this levels, your 320, you still have to go back to 300 and trigger something. You know, if I was going to look for something to retest, it would have to be minimum 316 or lower. I just you know and all what I'm saying is, especially kind of a follow up from the comment a few moments ago, where last few days are the rollover again, especially things like Pac West after what happened a week or 2 weeks ago, and then these guys coming out saying everything's fine. That's like Kramer coming out and saying, "Yeah, Bear Stearns is, you know, that's totally fine."
Fine.
And that's what I thought of when I saw Jamie Dimon come out and be like, "Yeah, it's almost over," or "This was the
Yeah, it's
last
behind
one."
us. Yeah.
And that's when he's probably unloading all of his bank positions. But if we're looking at this, where it has to come in to even think about where it needs to go to be another long opportunity, it's coming back down to retest pattern levels at 300. Hold on one second, Mitch.
Sure. And you could take that a step further to even actual authority versus, talking about JP Diamond or Kramer. How about we talk about Fed regulators discussing that they don't foresee they do not foresee any kind of rate cuts or rate pauses this year. That is, when they say that, that's pretty much a bluff to the market, and the market's going to test that bluff. That's why I really think we're about to start seeing some massive bank meltdowns even more, because that Jerome Powell, right? We're raising interest rates. We might raise interest rates again next month in June. That again, that is a the market's gonna see. The market's gonna. It's like a game of chicken with the entire market. So they're gonna test that. And
Yeah, that would be the only thing that would get me concerned really about the broader market of what's happened since October, November. If the banks start getting eviscerated, then and we'll see it in these larger stocks. Then it has my attention. Now it does have my attention. Now I'm looking closely to see if these things are going to fail. It doesn't look good. I mean, you got a couple that are right there that could fail like overnight. The Pac West is probably the next one, and then the Western Alliance is another one. So not the kind of market you want to see, where if you're expecting some kind of breakout, you don't want banks blowing up. Here's the XLF again, financial spider. And even, again, on the weekly, it's a type 2, it's a bat pattern, but we haven't, the yellow dot is a confirmation method that I put into the software that is includes price action, and you can see where the last couple of dots have come in. The most recent one back in December, that pretty much capped the reaction. The bullish one going back from July, that at least confirmed some lows. We're here again, but you need a minimum test of 31. You need two more
mhm.
weeks, and you're not there, and you're headed back down. And that's the way where when we employ the total framework, we want to see the reaction with confirmation do its thing, and then come back and ideally retest the zone and give you confirmation there. But that's at $30. We're at 32, and this last 4 6 weeks of action rolling back over, it tells you that this thing still has more to go on the downside. And I would think maybe even as low as a hop test, it's somewhere under this 30 area, maybe as low as 27,
Yeah.
wherever we get 2 bullish weeks. And so, that's for financials to say that that's over right now. Not yet. I
Just
mean,
begun, man. You know, if you look at like the weekly or the monthly, the XLF, you know what it is, right? It is the Wall Street psychology chart. And we've just completed the complacency phase.
let's look at
That's
that.
where we are on that chart. Not even kidding.
Oh
And
yeah,
you know, on the
with it did
like
not.
this whole rally, like this February 6th rally, like
Mhm.
that's concluding the complacency phase of the Wall Street psychology chart. So, and on the weekly, you're about to fall below the 200-week moving average again. Jeez. I
Yeah,
mean, you're testing it right now.
here's the monthly. Another one. When did this one come out? This came out in '99. Yeah, but did a full flush. I mean, that was the 2008 crisis. It took it to $5. That's amazing. But
Yeah.
you're another one of these where are we going to break the uptrend? You go back to the last time 2008. Again, I think that's what you want to. Those are the signs you want to look for: long-term uptrend violation, and then even better from a retracement perspective. The things to get worried about is, you do XAB when you get to the 50 level and you flush that, well, you go to the 886, and that would be the thing to look for in XLF if this does break down. And if
Yeah, I hit that 1414 perfectly.
yeah, on that
Insane.
down at the low. Um,
Well, from the 2007 high to the 2009 low, it hit that 1414 major fib extension. That's where it reversed at the top in 2021 or
oh, and
January
21.
22.
Oh, to the downside here.
Yeah, it was a beautiful
Check out
1414.
on the bottom, that was a perfect 1618. And there's a 141. Yeah, you're right. And down. Where's it 382? 382 is still like 27. If this recent pullback is just a 382 within the uptrend, you still got lower targets. And that's,
There's nothing there till $25 below 30, like instantly, right? You'd be going back to the 2001, 1999 peaks to test those below 30.
yeah, so eye on XLF because if that does flush under and makes new lows for the year, that would be a problem. That would definitely be a problem. And before I go much further, I think we should look really quick at interest rates because um, it's something I've looked at quite a bit. We had a lot of big patterns in the 2 year and the 10 year. And so, and what I think people should realize is that when things get bad, the first move for rates is down, is a drop. It's because it anticipates the weakness. And here's what's at the 2 year. Here's our weekly level. There you go. Oh, hold on. I got to bring back my bearish patterns. I turned them off. No, I didn't. Where was it? Oh, this was the thing on the 2 year. It wasn't a pattern, but this was an exact 1618. I've been saying this for a while. And I think what you need to look for on rates is a minimum 382 pullback to like 3.2, 3.18, which suggests further weakness. I mean, rates are going to drop if inflation decreases and growth decreases. But even with this topping out, um, coming back down to the threes on the 2 year is likely, and then the 10 year, which does have the pattern on the weekly, and that's something, we looked at that. It was, I mean, just almost exact when it hit, and it was almost a year ago that we started diving in on it because of we had a bat pattern and we had a couple of patterns here at 3.7 cents, excuse me, 3.7% on the yield, where this has not started to drop. And I think that's the other thing to look at, where if rates drop aggressively, that's not going to be a positive. It will be because of a negative. And I still say that this 10 year has got to come back to 2.3, 2.28 before any kind of trend resumption on rates. So those are, a couple of things to watch if we're going to have some kind of blow up issue those banks as XLF, Bank of America, JP Morgan, that kind of stuff. And then one or two more goes bankrupt where they get taken over. Another
Yeah,
30, 50 billion, who's counting.
among friends. Yeah.
But it's there. I think rates have topped for this cycle for now. I don't think we'd see that resumption in rates until we get back down to one of these targets. But again, the rates going down at this stage in the game is usually related to negative news. So
Yeah, it's
got
panic. I mean, at this point, like,
we
I mean, maybe they're going to say, "Oh, we got the numbers down on inflation, good enough," right? I don't think this can sustain until 2% inflation, which is their target, right? Or did they raise it?
I think that's, yeah, no, 2%, and that's a farce. And I think as soon as
Never
they
going to happen.
yeah, as soon as they raise it, um I think that is that would be a sign that they've turned on the printer again. I mean, you're looking for that. You're looking for them to turn on the printer again to get the wildness happen. If that's going to be the game here, I think the game is to wreck it, and consolidate the whole banking system. It seems like
Yep,
that's
certainly is.
the feel I have right now. And based on some of the details that came out on a few of those others that went bankrupt earlier, it seems like they kind of let them go bankrupt, and they could have had a better solution, but didn't, and they let those blow up and go into forfeiture first. And that was the rigged part of 2008, where there were a lot of banks that were in good position, but were forced to get into this program and admit, or at least make an admission, that their balance sheet wasn't as strong, and the first reaction was to sell. And that's, I mean, that's something that again came out of nowhere. One more to look at here. I want to look at the VIX, because the VIX
Dude,
not doing anything here at 17. Uh,
sedated.
yeah, and there's, I had mentioned a while back, we had some patterns down here, around 17 and change, a few, but this is really nothing here where again, I would want to see that a lot higher. If this was trending up, all right, we had a quick move for about a week, and that was it. And so a lot of mixed signals in this market. I mean, just it's really a disjointed market again, with
Big time.
mega caps holding up the market, and broader market super weak. I mean, noticeably weaker than the mega tech. And then you would suspect that the VIX would be doing something more. It's just not. It
Yeah.
what
But
could
I think that's it, man. They figured out how to tame the VIX with options or something, because this is the soft landing theory. If they can control the volatility index, that means they can control all the bots, all the algorithms, because right, the VIX dictates how the algos trade, and when they stop being in investor mode and they get into trading mode, where it's just like we saw in 2020 when that thing's hitting over 40, then yeah, you got some panic going on. But if this is the way the bear market's going, it's slow. It's like going, it consolidates forever, complacency, and then draws down, legs down again over months. Okay, there's no circuit breakers going off, so therefore you don't really have to panic. I mean, panic is going to be if we start getting 40 VIX with circuit breakers triggering at open the first 30 seconds. I mean, that's when you'll get interest rate cuts. But so they made, if the VIX stays the way it is, and you remember all of last year, not one effing time in a 52-week period from January 1st, 2022 to December 31st, 2022, did the VIX ever even touch 40, which we know 40 is the threshold for the algos. I think that's really telling.
Yep. So there's
So this is the soft landing we're living through, and it has everything. The VIX is the puzzle piece to the soft landing.
yeah, yeah, I agree with that. I mean, it's not anywhere that is triggering any kind of concern. Even your monthly chart, you go monthly, bar over bar, monthly, every range is lower since last summer, since the peak last summer. And so that won't change. Maybe you get back down to 10. That would be pretty remarkable, but that's been the lows for the whole century. And
That's where Google goes to, 786.
yeah, yeah. And so maybe they do that. And, there are a lot of like kind of cross currents where maybe the mega caps try to make a run to all-time highs or make a run to their 886s and then roll over. Now that you've got this kind of undercurrent with banks blowing up, let's see if we get a couple more banks. If they blow up, a couple big banks, or something like, I think like something like Bank of America or someone big like that, you see a big headline like that, then you got a problem.
Yeah, I don't think, yeah, I don't, how does that happen though? These have already been nationalized virtually, right? Already bailed out
Virtually,
banks.
yeah. I mean, Bank of America was what, 5 at the low? Two, sorry,
Yeah.
270, and that was totally orchestrated. I mean, that was orchestrated. But here's the crazy monthly chart on Bank of America that I did notice, and think of this as yet another cycle kind of bat pattern where I mean, it was a perfect 886. I mean, that's insane at 49.17, all-time 886. The high was basically 50. Now you're past a 382. What are you going to come to, like a 618, something like that? That's very possible. And Bank of America would be one of the ones to watch because it is perceived to be a safer bank, but who knows? Maybe that could be another Citicorp. And here's Wells Fargo monthly, which is another interesting consideration with what's going on in the banks. Is it was a shark at the COVID low, and it did a reaction, ran right into some major confirmation. Are we coming back down for a full type 2 of that shark of the COVID low? That, it's literally just in the last, I think, 3, 4 trading sessions with some more of these banks not recovering, that could be a long-term possibility. It's got to be a type 2 shark. I certainly, if I was going to be a long-term investor in Wells Fargo, I would be waiting for the retest of that pattern before I would think a larger cycle or anything is going to come off of this support. And you could,
Yeah, dude, you're talking about a $22 gap fill.
yeah,
Oh
yeah,
my
no
God,
doubt.
that would be like legit. That means like if that happened, there's 40% downside on Wells Fargo from here.
That's what it seems like. I mean, it didn't maybe a month ago, or 2 or 3 months ago, it seemed like maybe this was going to hold up there. But the recent breakdown, roll down, especially what was that? That was March, April, and in May. And again, this is the thing to look for. If we close the month and we take out lows, then we got problems. And you got problems on Bank of America, JP Morgan, Wells Fargo, Goldman Sachs. I'm more concerned about those wrecking the market than the regionals. They can sweep the regionals under the carpet and like hand feed
Hmm.
it to the big boys that or buy at pennies for the dollar.
Yep.
That's how
They
it
love it. They're
always.
incentivized to short, right? Are they not incentivized? Their
Totally.
trading desk incentivized to short these regional banks
Yep.
as hard as they can.
Yep. Yep. I always come back to my Bank United in 2008 where there were a bunch of banks that were going under, but there were a bunch of banks that were able to hold. And I had a whole bunch of things in Bank United, and it was in pennies. I had like 20 or 30 cents, and I bought, I think it was like 1.5 million shares or something down there. And it went to a buck, and I got out at 80 cents, and then it got taken over like 2 weeks later. I could have got killed, but I was looking at a lot of those banks like, oh God, if they just stay in business, this is a once in a lifetime cycle low opportunity. And that's the problem with when they rig the system, is that they're going to feed these smaller banks to their favorite big money people. Wilbur Ross bought Bank United for, it was a joke of a purchase price, and they made out. This happened in the early 90s too, with when they had the ROTC, what is it? Not ROTC, the RTC, Resolution Trust Corporation, in the early 90s after the savings and loan disaster. They basically packaged up all these bad loans and assets, and they literally gave them away in some instances to anyone that could take the debt. But I think they've streamlined that process to basically crash the smaller banks and then just give them to the bigger banks and consolidate the whole industry. That's really what's happened since 2008. But since the early 90s, you've had such a consolidation that these smaller banks might be a victim of that policy. Here's Huntington Bank Corp. And I mean, that was always a great bank, but look, you're down here with another shark. Okay, looking like
Brutal.
got to come back
Wow. So
and
bad.
retest.
I've never looked at this chart. Wow.
Yeah, 7 or 4. I mean, that's a fairly, or used to be considered a fairly solid regional bank, but you got major monthly patterns. So, folks, if you're working with the software, I recommend looking at your monthly charts because there's a lot of things happening on the monthly charts that are telling. And I would look at this as a regional where until I got another yellow dot, I mean, bearish yellow dot down here where your last bullish dots in the monthly, and that was 10 years ago. You can't expect much until we get that confirmation, and you're almost there, but
You get another 15% downside before
yeah.
you hit,
Oh
hit
yeah,
that
easily.
next support.
But you're clearly trending in that direction, and your amplified RSI, that's oversold. So you're getting to that point where you're already wrecked, but your structural levels are $7. It's not 10. It's more like 7 or 4. And so, a lot of these are going, they have to go back just based on the framework. They've got to retest these larger patterns. But if they come back and then they completely flush down, then you've got another situation of a full retest. In this case, think of it this way: all of the stuff that they employed, okay, after the 2008 crisis, and this is one of the better regionals, and that's all it could do. I mean, although it was from 2 to 14 as a 7 bagger, yeah, but it structurally couldn't get above the 50% level, couldn't challenge to make new highs or anything. And if we come all the way back down, 886, you get pretty low. I mean, you get back to the more like the 4 range. So,
God.
yeah,
Oh yeah, and that's 449 to support. Yeah.
yeah, and I would
Like
have been all right.
2008.
I would have been all right with what happened in March, even though that was a big candle. What's going on in May after a pause in April is worse. That you have a big candle down. All right, that's a 1 month phenomenon, a pause, but okay, now you're going to fail it again. And even if I was connecting dots, I would still say within that range, go off the COVID low. You still have to do another bat. So this is why the banks, they've got to be watched now. I mean, now into the end of May for what they do, because they're going to have to go lower. If they go lower, they pull the market lower despite the mega cap, and we'll see what they do at those levels. If they destroy them and then they start blowing up, that's going to be a problem. I mean, we're trying to anticipate potential issues of things that are currently developing, and that stuff falling apart. Yeah, it's on my radar. I mean, it definitely is something I'm looking at. Positively looking at stuff like Microsoft, and I'm impressed with what that's done in the last month, or Meta, what that's done in the last few months, combined with things like the banks that are, it's important because if they were going down, that's one thing, but they're blowing up, that's a problem. And I think it's, here's Microsoft. All right, there's Microsoft on the monthly. That's a hell of a chart. I mean, that's just amazing monthly chart. Okay, and I'm that's one of my reasons why I'm still constructive on this market. That's way bigger. That market cap is way bigger than any bank. But if we
Mhm.
got to the 886 and then we rolled over, okay, that they would be certainly the last to go. Apple, Microsoft,
Yep.
they would be the last to go, but they're not
Nvidia. Yeah.
flashing anything yet. But the banks,
But they're at the reaction areas, though. That's for sure. They're at the areas where, hey, if it's going to do it, this is exactly where it would happen, 886s.
yeah, and that could be a big cycle thing. I mean, if you got notice Microsoft is for what I do, Harmonic Strength Index, we're up there. We're clipping it this month. So and I'm watching it. This would actually Microsoft needs to have an absolutely devastatingly good, spectacular summer. We need to break out on Microsoft to basically overcome what this is saying. That
Yeah, man.
if it's overbought
This is
here and you're at the 886
so bad, man.
and
That's like attempted rally. This is the attempted rally going on right now, After the crash, the buyers are always going to attempt that rally, for the most part, right? They're going to try. This is a really good attempt. But yeah, you're right. If it's like getting overbought now, that's almost like hidden bearish divergence, right? From one peak, right? The last time it got to this HSI peak, and it's now getting higher and matching. But if it makes a lower high, if it doesn't take out that all-time high, that is a form of hidden bearish divergence.
yeah, if we come
A
like
lower high, on price. Yeah.
if you come like that, even though we almost got one in 20, almost a perfect test there. And here's where, even if you go back here, 2020, all right, we did have overbought HSI. It still paused, even though it failed. You still paused for 2 months. And we get to that 886, the way that's lining up, I would expect a structural pause if you don't blast through. And that's something else I'm looking for, where if Microsoft can't blast above 330 or 340, I think it'll go straight to 330 or 340 now. And that's why I keep looking for every 5-minute pullback on Microsoft, because I think that's where we are. Even if we're connecting dots, they kind of look like this. You can connect this to there, and we get a shark again to the 886 is perfect numbers. That's 343, and I think you could go there literally by June or July on a straight month over month shot. But if we register some overbought, I mean, I'm clearly that's what I'm looking for. It's early, still early, but maybe a month, maybe in 2 months. But that would be a big development for Microsoft, and I know Apple is relatively the same, pretty close. Not quite
Yeah,
there
Apple
yet, but
outperforming.
Apple needs to break out, and you would need to see all of these really do a sizable breakout now to get for this market to continue, because that's who's holding it up, and
Hmm.
that's I'm thinking June or July. You need to be at all-time new highs, which is 182, 183 on Apple, and there's you're getting close to overbought. You're not quite there yet. But I think we will continue on that path, and maybe kiss up to that level, 180 area. There's a few things up there. 175 is the hop. There's a prior crab pattern. So you don't want to see it roll over. I would say watch the banks, watch Apple, watch Microsoft. Those are the big ones that are holding the banks. If they blow up from here, all right, then I'd get, it's not an instantaneous thing, but it would be something that would be increasingly more concerning. So watch it. I mean, it's
Yeah,
definitely,
it's like, yeah, you have like, man, if during like the index funds being sideways, trying to go up, and then you have banks performing miserably, just wait for the day that the S&P flushes, like for real, Apple dumps for real, Nvidia actually reacts for real, for even just like decent pullbacks, 50% pullbacks. You just got to imagine like what the underperformers of the macro, how bad it's going to be for them. Like it'll be brutal a day like that. And it's just, if they can't muster rallies when the S&P is not like dumping hard, just wait until we do see a pullback, because there will be a pullback at some point, even if it goes higher from here for a little bit longer.
Yeah. Let's take a peek at Bitcoin before we get out of here.
Sure, yeah.
Holding
Which is, recovered a little
27,000.
bit. Yeah.
So they flushed it right below the low. Now they're trying to hold it. So that's it. 27,000 that's your floor. If we're going to have problems, it's under there. And let's see what the close is tonight. I'm going to join you tonight, right?
Mm-hmm.
Yeah, I probably catch me like 7:45, my deal. But we'll see, let's see what this all important close for Bitcoin holds tonight and go from there, because it's right on the edge.
That 3-day bearish divergence on Bitcoin's finally catching some resolution. It seems like it was really nice.
Yeah,
Really nice 3-day.
The hourly is a butterfly. The 4 hours a bat. With those kind of patterns, you have to hold here. I mean, especially this hourly. You're trying to check back here. 27,186. You were, what was it, low? 26,833. That has to be your low right now, and it was a type 2. So not only does it have to be the low, but you need to see that go to 28.8. Sounds kind of crazy, right? But if it doesn't do that, and you can talk to me this weekend or even on Tuesday, if we're not making our progress and we're below here, okay, then we'll have longer term problems they'll take you into June. I mean, just alts are melting. The big ones are still holding up, but we'll see. I'm definitely focused on what happens here. I would have to rethink even the 382 target at 37.2 if we fail these lows. It would just be a drag.
Yeah. The 25.3 seems to me like the next target, which is just the scam wick low from May 10th, a peak from August 14th of last year, and a peak from February 18th of this year. It has never been formally back tested, but and that's why. And that could be mild, a mild pullback, and no technical damage done. You're not making a lower low until you fall below 20K. That's it. Any pivot, any sell-off that pivots above 20K equals higher low. So, and it's all coming off of a higher high.
Yeah,
from April.
Whatever the low is, it's there's your higher low. From that low,
6% downside.
That low
from here.
Yeah, that's a little far for what I'm my scenario. I would 27,000's been my support level. That really needed to hold to get up to 37. So we'll wait and see, folks. But Mitch, thanks for joining us today. I'm going to roll.
Yeah, man. Thanks for having me.
Appreciate it. It's been a while, but always great. And
absolutely, man.
Thank you, everybody in the chat, for joining up. It was a great stream. I'll be over with Mitch tonight. He starts at 7. Join him over at Mitch Ray TA on YouTube.
It is the Leroy Jenkins anniversary stream tonight. Just letting you know.
Who's that?
Leroy Jenkins. You don't know who Leroy Jenkins is, man. Oh my God! It's like World of Warcraft. The dude that I'm sure you've heard on my streams. I play the sound clip. Anyone tips over $50, you get Leroy Jenkins. He screams and runs into the dungeon and then gets his whole raid killed in Warcraft. And then he says Leroy Jenkins. And then after they're all dead, he says, "At least I got chicken." It's just for us nerds out there, millennial nerds that played Warcraft back in the college days. Yeah. It looms in our heart. So we honor Leroy by I am Leroy Jenkins, and it's a whole World of Warcraft themed stream. So it just happens to be the day you'll be streaming with me. So just no big deal. You just act like nothing's happening. I'm just telling you.
I'll check it out. I'm checking it out. I'm looking at.
Yeah, it's not a long clip, dude. It's not a long clip, but it's famous. It's super famous.
It's that. I'll look at that. I mean, this is 2 minutes.
Does anybody need
Oh,
Yep,
okay.
it's
I know that clip. I know that. Yeah.
that's it, man. Yeah, he's like a huge cultural meme within the Mitch Ray TA community.
Okay. Yeah, I do. I knew that. All right, cool.
Dude,
I'm gonna go finish my day, my man. You have a great one. I'll catch you tonight. I'll ding you on Discord.
sounds good.
Have a
I'll
good
do the
one.
same.
Yep.
All right, man. God bless.
You too.
Peace.
Peace. All right, everybody. Thanks again. Great session today, and great to have Mitch back always. Mitch. I love hearing Mitch talk because he's always going to show me a few markets that maybe I've got my head up my butt too much to get a little perspective. I'm always going to stick to my levels, and I'm certainly the way we're coming in a lot of these crypto retests. I'm concerned. I've got my hyper glasses on this area 27 and Ethereum at 1800. I always think there's plenty of time to capitalize on that. So we'll see if this is going to be something much more severe. It'll show itself, and it'll show itself on the next few days or over the weekend. I'm more looking at a lot of these markets is how we're going to wrap up May. How we're going to finish May. The last 2 or 3 weeks here could put us in a different spot. I still like the major market. I like the macro. Since we've been talking, QQQs are up. The SPY has rebounded a little bit. Microsoft, Meta, they've all moved. And we just have to see how this shakes out. I mean, we've had a few volatile weeks here on Bitcoin as it's popped above 26 for the first time. And let's just see. I'm going to stick to my scenario that 27 is going to get banged for a few times, and that 37,320. I think Mitch thinks it's going lower. I might change my tune in 2 or 3 days, but let's see if that holds. If it doesn't hold and we crack under 26, then I'll just be like, all right, wait for the next. We're going to just have to step back and wait for it. We are oversold again currently, and that actually is a help on Bitcoin, but we have to see how this does. It pivot out in a day? Does it take 2 or 3 days? I think we go to tonight's close. You go to Sunday's close. We'll see how much that exceeds that 27 level. But I appreciate everyone hanging in. Let's give away one more gold membership. GOLD. First one person to put in GOLD for everyone that's hung in here. You guys win a gold membership. Appreciate everybody. We'll be back on Tuesday. I didn't give away any books, but we'll give away books next time. Big shout out to Brad Fisher. I didn't see you in here, and a big congratulations to you, my man. Been meaning to send you a note. Big congratulations on the new baby. Zeke, Z, you win the gold membership. Contact Miss Stephanie on harmonictrader.com. And yes, that's where to go. Get started with Harmonic Trader. Go to harmonictrader.com, the basic membership, and then go to the basic members page and get access to all the books, the videos, software. Here's where you go for the Discord and cheat sheets. If you have any questions, get to me on the Discord. You can message me directly. I usually get back within 24 hours. All right, everybody. Thanks again. Great long session. This is a marathon session for me. It's just a warm up for Mitch, but I'll be over with him tonight. Catch me there. Everyone else, see you on Tuesday, 12 noon. As always, go get him, folks. Have a great one.